Yeah, man. And you know, just a couple of data points before you get into the stuff. One, of course, I mean, it's just been such a tough weekend for aviation watchers, right? I mean, 3 or 4 incidents. Yeah. The Azerbaijan incident was, of course, and a lot of question marks over what happened there. But look at the others, the Jeju Airlines Boeing in South Korea, or the Air Canada flight skidding off the runway, or even the third one, I think there was the KLM airline, if I'm not wrong, which had to be diverted because of faulty losing hydraulic gears, right? So what's happening out there is difficult.
And this is around the time when you usually have a substantially higher amount of air traffic because of travel. Yeah. I wonder if that's something, one of the factors here. But yeah, it's certainly somewhat of a coincidence that so many incidents are happening together at one point in time.
Yeah, so prayers for that. And the other is a trivia, Agam. I didn't know it, of course, I had the benefit of having read it. But the best performing stock on the S&P 500 is Palantir. And the interesting thing is, I was reading this Charlie Bilello tweet, right? And he writes this, that it entered 2023 with a price to earnings ratio of 190 times and price to sales of 18. Then it became the best performing stock of 2024. And it's ending the year, or at least the last 2 days, it's ending with 400 times earnings and 70 times sales. I mean, whoever thought Palantir was expensive, and it was.
At that point in time, yes.
Imagine, you lost out on the best performing stock on the S&P 500.
Yeah, I wonder if there are stocks in the Indian stock market.
I'm sure there must be.
where potentially could see that kind of, appreciation in the valuations. But, as usual, let's start off with how things are going on globally. And again, it's holiday season, so, volumes are largely slightly lower. Obviously, this is something that we can expect. But at least as far as the American markets are concerned, US markets ended lower last Friday. Over the weekend, even in terms of the futures, we haven't seen too much traction there. We're slightly lower there as well. But must remember that essentially, the last week of any trading year, for that matter, is relatively the volumes will thin out significantly. That said, in terms of the Asian markets, right now at the moment, they're mixed. So if you consider something like, the Shanghai, the Hang Seng, as well as the Nikkei, a little bit of green, a little bit of red. It's the South Korean markets which are under a little bit of duress right now. Firstly, of course, is because of their industrial production data, which has been weakened. Let's not forget, it's on a little bit of a tipping point when it comes to political turmoil there. And besides that, of course, the Jeju airline doesn't really, incident doesn't really help sentiment in general for South Korea. So those are a handful of, points that we can keep in mind when it comes to Asian markets too. Let's talk about, stuff beyond the equity markets, and if we can consider the US 10-year bond yields. Again, they haven't moved too much. They're largely around the mark of around 4.62, and they continue to be at the 7-month high. Now, if all the guesses on the street suggest, and they are true, we likely could see yields inch up higher. But that's a wait and watch. In fact, we'll get your view on that one just a bit as well from an expert. But moving on, as far as crude is concerned too, again, that remained largely where it left off. So that continues to trade around $70.7 a barrel. Not much has changed there. And again, we'll await for more cues going into the next 1 week. Based on that, as far as the Nifty implied open is concerned right now, expected to be absolutely flat, and this won't be too much of a surprise then. But Neeraj, speaking of the Nifty, how is the trade setup looking right now?
Yeah, it's interesting, and actually, just before we get to trade setup, Agam, should we just go and quickly check with Stephen Davies for all the things that you mentioned as well? He's founder and chief executive officer at Javelin Wealth Management, joins us right now on the show. Stephen, good evening to you, I presume, and at the onset, have a great festive time, of course, and a happy new year to you.
Thank you.
Just wondering, what have you made of the last few days, the absence of the Santa rally, the fact that yields continue to stay stubbornly high? What does this mean as we end the calendar and enter the new year?
Well, first of all, we kind of had the Santa rally following the US election results. So there was obviously a strong performance from particularly the US market post the election. That carried us through into the early part of December. And since then, we've obviously seen a little bit of consolidation and profit taking that's come in. I think referencing your point on bond yields, yes, we've certainly seen a little bit of pause for reflection, I think, in the bond markets as we head into the new year and the inauguration of Mr. Donald Trump on the 20th of January, and what that's going to mean for government funding and bond markets in general. So a little bit of nervousness coming through from that, and that combines with a slightly more hawkish tone from the Fed, which would suggest that maybe interest rates are not going to be cut quite as aggressively as perhaps people were anticipating 6 months ago.
Stephen, good morning and good evening to you. The assumption, of course, here is that, interest rates will remain where they are. But considering on the expectations that the US economy could see inflation once President Trump takes office, could there be a possibility that interest rate could see absolutely no cuts in the year, and perhaps the Fed under those circumstances may have to consider, taking hikes again?
It's entirely possible. And at the moment, the sort of lead that we're getting out of the prospective administration is kind of a little bit uncertain. We've got, on the one hand, a number of people in the future administration are talking about various spending programs, others talking about various spending cuts, and the prospect for the Treasury Secretary position, Scott Bessent, is looking to try and reduce the size of the deficit during the course of the next 4 years. So it's going to be interesting to see how all of that plays out over the course of the next couple of months, because you can't give tax cuts without cutting spending if you're not going to see your debt level and the deficit rise. So a little bit of tension there, and it's going to be interesting to see how that develops.
Okay. Stephen, the other point is, do you reckon that if indeed we see, I mean, this is a hypothesis, of course, but if indeed we see tariffs and reciprocal action from China in some fashion as well, but instead of exporting deflation to the world, it starts exporting inflation. For the US, it becomes inflationary as well in whatever limited shape or form it does, tariffs at large. We might not see the 50 basis points cut that the street is working with right now. Instead, maybe lower, maybe nothing, or maybe even a hike. And what would that mean for risk assets, particularly in the emerging market side? Because EM's been working with a falling rate cut trajectory and money moving eastward. Could the reverse happen?
Indeed, it could. And this is where this tension comes from that I was referring to earlier on, is that Donald Trump likes to watch the stock market. He views stock market performance as indicative of both the strength of the US economy and confidence in his administration. So he's going to be watching that very closely. That said, tariffs, yes, you're quite right, are inflationary on the basis of the fact that they will increase import inputs for US manufacturers. That will presumably be offset to some extent by onshoring of productive capacity in the United States, leading to a continued strong US economy. But yes, it does mean that the Federal Reserve is going to be faced with a very difficult 2025 as they try and combine all of these conflicting objectives in monetary policy.
Stephen, Neeraj was just referencing Palantir in terms of the valuations at which it trades at currently. My question then is to do with valuations in the US stock markets in general. Do you find them to be richly valued? Is there a chance, perhaps a case for a little bit of a correction in the near term?
Yeah, there's no doubting that valuations in the US stock market are pretty high. That said, the US economy is also confounding skeptics in terms of the pace of growth that is being able to generate. By comparison with lots of other countries around the world, therefore, the US economy still looks to be pretty much the single most powerful, the single most rapidly growing large economy out of any, bar none, including China. So if you combine that all in one message, yes, you're paying a premium, but you are also getting the growth which a lot of other countries lack. So from that perspective, I think that it wouldn't be surprising to see some profit taking coming through. But as we've seen on numerous occasions, that will probably also, after an appropriate pause, be used as an opportunity for buying back.
Okay, Stephen, we'll leave it at that. Thank you so much for joining in with your insights, and wishing you and yours a fabulous 2025.
And the same to you guys. Thanks for the time.
Thank you. Thank you for your time. By the way, viewers, just before we go ahead on the trade setup, an NDTV Profit exclusive on your screen, and I think in some fashion this was so much needed. Whether or not the notices are right or wrong is separate, but there's this plethora of lending firms which are giving loans on the click of a button, and we hear so many stories of people getting indebted, especially in rural India. People are not financially quite aware. I think all of this is linked to that. IT department is questioning, the way, the modus operandi, if you will. I'm not saying that's illegal. Just wants to know the details, I presume. The IT are asked to furnish details by December 30th. I think we'll talk all about this. Maybe Vishy will come in and talk about this, but notices have been sent to 40 fintechs. This is interesting. And then, we know that 2024 has been a year of the regulatory bodies coming in and trying to bring in the much needed caution at various ends of the market. This is no different, and this seems to be happening. But like I said, or like we said, let's talk about the trade setup for the day today. I would suspect, I don't know if Agam differs, but I would suspect that the day would be quiet with possibly a downward bias, because it's not that the world markets are really rocking in trade. So that's part one of the equation. And because you look at specific pockets of strength and weakness, right? You may look at hospitality, because Ventive gets listed today. In the first 1 week of calendar year 25, we'll see the ITC hotels demerger happening as well. So clearly, the hospitality space comes into focus. Remember, with the performance of Indian hotels, Chalet, Lemon Tree and the others, and all real estate firms having a hospitality arm, it's anyways a real and present sector. Now with these two happening as well, I think there is merit in looking at this whole space afresh, and there might be some activity into these names in the next few days. And what might see a bit of a downtake is maybe brokerage stocks. And Agam, I found that interesting. As per some data that came out, 37% cut in volumes for derivatives.
Yeah.
And what it would do to brokerage stocks Q3 earnings is probably now a foregone conclusion.
Yes, it certainly will impact discount brokerages specifically, because they heavily depended on the futures and options space, and now that you don't have a lot of the weeklies cut off. But shall we talk about stocks then, which will be in focus today? And I'm going to start with, Vodafone Idea. So what we understand is that the Department of Telecommunications has waived off bank guarantee requirement for telecom operators, and this is of course a positive for Vodafone Idea, because it gives them a little bit more breathing space for now. These bank guarantees were required for spectrum options before 2021, and the bank guarantees waive off those from 2012, 2014, 2015 there onwards, along with the 2021 spectrum auctions as well. And the next one on my radar is also Adani Green, where we understand that they've commissioned a handful of projects, and this always is a positive for a stock like Adani Green, because you will start seeing revenue generation and recognition on the books. So this includes unit commissions of around 62 megawatts in wind power component in Khavda, Gujarat, as well as another 112.5 megawatt solar power projects in Khavda, Gujarat too. And this actually takes Adani Green's total operational renewable capacity to 11,600 megawatts, or 11.6 gigs. And finally, we also have Prestige Estates, where once again the company has signed a business transfer agreement with Prestige Hospitality Ventures, and this is to transfer the company's hospitality undertaking of 313 crores. Well, we'll have to wait and watch. It's going to be an interesting one, whether or not we eventually do have a little bit of spin-off here when it comes to hospitality, as is the case for many other realty companies. But at least as far as this specific transfer is concerned, it's expected to be completed in 90 days. So that's something which is going to be on our radar today.
I thought JSW Energy was interesting as well. Yeah. I don't think you covered that, so I'm going to try and take that as my first stock. So it's a thumbs up from our end because it's acquired O2 Power for a total enterprise value of 12,468 crores. And you'll hear from the management today, of course. But the reason why this is, and I'm resting on the shoulders of Motilal Oswal to try and tell our viewers why this is interesting. So Motilal Oswal, of course, is a buy and a target price of 810, but they say that the acquisition of this 4.7 gigawatts at about 7 times EV/EBITDA unlocks about 57 rupees per share of value for JSW Energy. And the math is one thing, the rationale of some of the other points is interesting. So they say interest cost for O2 Power is almost at par, 8.8% at par with JSW Energy. So no downsides there. In fact, if anything, there is upside because the receivable days for O2 Power are at 43, which is lower than JSW Energy's receivable days at about 68. So therefore, there is optimism there too. And 87% of the portfolio is backed by utilities such as SECI, NTPC and SJVN. The remaining 30% C&I portfolio largely comprises of AAA or higher rated issuers, which means that the nature of the buyers of power is secure, is stable, and therefore may just may ensure that there is less or no NPAs, if you will. And therefore, Motilal Oswal seems to be very constructive on this acquisition for JSW Energy. Remember, we'll be joined by the management a bit later on to speak about this. So that's something you want to keep an eye out for. So that's the first one on my radar. Ola Electric was interesting, was down about 3%, if I'm not wrong, in Friday's session. And the CMO, Anshul Khandelwal, has resigned from his post, and Suvanil Chatterjee, who is also the CTO and product officer combined, has also resigned. So, two high-profile resignations in Ola Electric. Will it impact the stock? Let's wait and watch. So that's number two. And from all the others, I'm bringing up Garuda Construction and Engineering. Again, a thumbs up from our end, simply because of the nature of the buyer or the name of the buyer. Utpal Sheth is bought 4.8 lakh shares at about 128.49 rupees a share. So keep an eye out for Garuda, could be an interesting one. So these are my top three, Agam.
All right. There you have it. That's a handful of names that we're watching out for and keeping on our radar. But we have an interesting note coming in on Adani Enterprises, which has seen subdued moments over the last 3 months. But we have an interesting perspective from Ventura Securities, and they are in fact positive on the company. Let's get in Anushi to tell us a little bit more about what Ventura is making of Adani Enterprises. Anushi, good morning.
Hey, morning Agam. So Ventura has a buy recommendation on the stock, and this is with a target price of 3,801, which is a 57.8% of an upside. This is for the next 2 years that they've given this target price. That's for next 24 months. A couple of factors to consider as to why they're bullish on the stock. Firstly, they've started the note with the statement of it's the largest business incubator with a high DNA for growth for the business. They expect a revenue and net earnings CAGR growth of 17.5% and 46% over FY24 to 27. So this net earnings growth of 46% that we are seeing is driven by the EBITDA expansion of around 647 basis points that they expect to 18.3% over this FY24 to 27 period. A couple of growth drivers that one should keep in mind for the business and what should be looked at is firstly that diversification into the green hydrogen business and its ecosystem, airport, solar and wind turbine generator business, another key drivers supporting the growth of the business. What is an interesting mix is also higher revenue contribution from copper business is something that we should be watching out for. This would support the ROE, that's return on equity, and ROC, ROIC return ratio improvement as well to around 563 basis points. ROA improvement that they project to 14.5%, And return on invested capital, they project around 11.3%, that is around 99 basis points of an improvement. In the bull case scenario also, they see around a 139% of an upside in the target price, which is around 5,748 rupees, while in the bear case scenario, the target price is around 2,179, which is around a 9.5% of a downside. But just keeping all these factors in check, for the next 2 years, their projection remains as 58% of a growth in their target price, that is at around 3,801. This is what Ventura has stated for Adani Enterprises.
Okay, well, certainly keep an eye out for this, the incubator, and what happens to it in the days to come. Standard disclaimer, of course, the Adani Group owns NDTV and you're watching NDTV Profit. So keep that in the back of your mind. Okay, a few other names that you want to keep an eye out for. In fact, speaking of brokerages, there is an Aquarius note on Jyoti CNC. Since we were talking about a brokerage note, I just wanted to add that first. They've initiated with an ad rating and a target price of 1450. And they say that they estimate of 40%, 47% and 66% sales, EBITDA and PAT CAGR over FY24 to 27. And they say that FY26 ROE at 27% is great, and meaningful free cash flow will happen from FY27 onwards. So earnings growth till FY27, meaningful free cash flow FY27 onwards. So interesting. Watch out for this one. Watch out for Coforge and Cigniti. The merger update is out. The swap ratio is announced. 5 shares of Cigniti for 1 share of Coforge. Now, just the math, the swap ratio is slightly favorable. Just 2.17% for Cigniti shareholders. So I think the arbitrage, if any, I mean, this 2.17% will get extinguished in the pre-open itself. So nothing out there per se for people to make hay, if you will. And Gujarat Fluoro could be an interesting one because unfortunate incident that 4 people died after a gas leak at the Bharuch unit. So this one too could be a bit weak, in addition to, of course, maybe the brokerage stocks that me and Agam spoke about. So yeah, a few others on my list, Agam.
Yeah, well, you know, actually, so since we are towards the end of this year, let's shift focus to a theme that's shown in 2024 and promises to keep the momentum coming in 2025. And I'm talking about data centers. With AI advancements, accelerating data center companies are set to remain in the spotlight, as they are critical for processing the data-driven innovation. But here's a big question. How can you profit from the booming trend? Well, Mihika is here to guide you on how to play the data center theme in 2025. Mihika, good morning.
Good morning. So this is a space that has garnered traction. Let me start off with the basics. What is a data center? It's basically a facility that is designed to store, process and transmit large volumes of data, and these centers house computing and as well as network equipment for IT tech. But I'll base the entire premise on one fact, which is India generates about 20% of global data, but we are still, we only account for 3% of the total global data center capacity, and there are multiple factors that will help drive the Indian data center market. One is growing internet and mobile broadband penetration, the increased adoption of artificial intelligence, the Internet of Things, as well as cloud services, and the policy enablers like government initiatives. When you talk about how much is data center capacity expected to increase, well, it's expected to double by FY27 as per CBRE Research India and ICRA Research. FY14 capacity stood at 158 megawatts, FY24 950, but FY25 it's set to rise to 1,250 to 1,300 megawatts, and by FY27 we could see it come to around 1,700 by FY26 itself. When you talk about the investment potential, where it's around 50,000 crores over the next 3 years as per Carriage Ratings. Now, when we talk about the stocks that have exposure to this theme, one is Anantraj, targeting 300 megawatts of capacity within the next 5 years, and they also enjoy an early mover advantage in terms of costs and time. Then is Adani Enterprises, where you have the exposure via JV called Adani Connex, where the operating capacity is 17 megawatts, but 487 megawatts is yet to come. We have Reliance Industries, they have exposure via JV named Digital Connection with around 120 megawatts that is going to be upcoming. We also have Techno Electric and Engineering, they're investing 1 billion in this theme to build 250 megawatts of data capacity by 2030, and they're also going to act as an EPC partner for other companies building data centers. We also have Bharti Airtel Airtel exposure via its subsidiary Nextra, operating capacity at 198 megawatts, more 239 megawatts yet to come. We also have equipment providers that would benefit. As per UBS, there are 3 stocks which have a revenue exposure of around 19% for Schneider, ABB and Siemens at 5%. And we also have ancillary stocks, 5 that I want to name. One is Exide Industry. It's a maker of direct current batteries specifically designed for data center applications. L&T is providing tech-focused expertise for data centers via L&T Cloudfinity. We also have Sterlite Techs. It's a maker of optic fiber cables for high-speed data transmission within data centers itself. Blue Star, because of its exposure in cooling equipment and air conditioning, the cooling equipment is an important feature that helps kind of maintain the data center facility. And lastly, we also have power companies, because data centers is expected to account for 33% of future Indian power demand as we go forward.
Yep. Watch out for data centers in focus. And yeah, Mihika, thanks for putting this into perspective. Agam, I just wonder, data centers, AI strings, I'm forgetting which management, but 3 days ago we were speaking to one management who said that the demand for the usage of power on AI is 8 to 10 times the usage of power on a normal search string. Right. So if AI is the buzzword, data centers is coming up, global capability centers being set up, lock, stock, barrel in India, Indian power companies might have a field day over the next few days, weeks, months, years maybe.
Yeah, I mean, there is no doubt about the fact that the demand is only going to go up. And of course, notwithstanding the new JSW Energy acquisition, we do know that the kind of traction that a lot of these companies are making as far as, preparing to deal with the demand is concerned. But with that, with the union budget of 2025-26 on the horizon, the CII has also proposed measures aimed at easing inflation and boosting consumption, from reducing excise duty on fuel to lowering marginal tax rates for middle income earners. And the industry body says that these steps could spur growth and tax revenue. And we have Rishabh to bring in more details on this one. Good morning, Rishabh.
Good morning, Agam. We have the all-industry meet that is set to happen at 11 a.m. today. We have industry bodies, CII, ASSOCHAM, FICCI, as well as PhD CCI, all set to meet the finance minister. And we know now the flavor of what will be discussed, especially by the CII, which is the industry leader. They have called for an excise duty cut on fuel. They've said that it contributes significantly to inflationary pressures, and these pressures have somewhat eroded purchasing power. And most of CII's measures are all aimed at boosting consumption. Apart from the excise duty cut, they've argued for a cut in marginal tax rates for personal incomes of up to 20 lakh rupees per annum. They've also called for a wage hike at the Narega to about 375 per day, as well as a better outlay under the PM Kisan scheme. Also, among the consumption boosting measures that they've announced are consumption vouchers, especially for the lower income group. So a bunch of measures, all of them aimed at boosting consumption that has been somewhat sluggish.
All right, Rishabh, thank you so much for getting us all those updates around, what we can expect from the union budget. Of course, with the run-up, and this time it's going to be on a Saturday, the 1st of February, there's plenty of data that we need to keep an eye on, and plenty of other factors to keep in watch. But that said, we have 3 more listings today. It just keeps on coming, doesn't it? But we have my colleague Sajid to take us through what we can watch out for in today's day of trade. Sajid, over to you.
That's right, Agam. 3 more listings coming today, and going into December 31st, we have another one which is coming, Unimec, tomorrow. But today we have Carrero India, Ventive Hospitality, and Senores Pharmaceuticals. if you look at the basic IPO size, 1250 crores, the issue was subscribed to 1.14 times. Fintech Hospitality, which runs brands under the name of JW Marriott, Ritz-Carlton and Atmosphere in Pune, Bangalore and Maldives. The issue size was 1600 crores and it was subscribed 6.17 times. Cenorus Pharma, 582 crores. This is an interesting IPO in the CDMO space. That was subscribed 54.5 times there. If you look at each of them, Carraro in India, 1250 crore primarily an offer for sale. Italian parent selling a part of it to list the Indian arm in India, and it's primarily in the business of providing axles and key equipment for tractors and construction equipment. That's one company which is there. The pricing was 704 rupees per share. There wasn't much of a demand there. It just scraped through. And if you look at the grey market, it's almost flat for this company there. The second one is Ventive Hospitality, which is promoted by Panchsheel and Blackstone, hotels and resorts chain based out of Pune, running operations in Pune, Bengaluru and Maldives. Total issue size of nearly 1600 crores. The fund 1400 crores odd been used to pay off debt by the JV because it acquired some of the assets of late, and that's something which is going at a grey market premium of nearly 70 odd rupees. So we're looking at 700 to 710 rupees per share kind of listing there. Cenorus Pharma. This is an interesting one. It's a pharma company into CDMO and the fact that it develops pharmaceutical ingredients and molecules, and then it licenses these molecules to other pharma companies, and that IPO was roughly 582 crores. It's a mix of fresh issue and offer for sale. 500 crores coming in fresh and 82.1 in offer for sale there, and the capex, the fresh issue is going to be used for capex for his US arm and repayment of some of the borrowings which is there. Here the grey market is very high, 284 or 280 to 84 rupees it's quoting on. So the listing is going to be somewhere between 670 to 675 odd. So three new IPOs getting listed in the markets today. Cenorus is something to watch out for because there is going to be some kind of demand for this IPO.
Certainly. Sajid, thank you so much for getting us all those updates around those three listings, and come 10 o'clock we'll also give you an idea about how they have in fact listed. Well, the expectation is that even though the volumes in general could be lower for the markets as a whole, well, there certainly will be a lot of traction for these three names coming in. But on that note, let's talk about the futures and options space. Now, at least as far as Friday is concerned, sure, we saw a little bit of uptick on Friday as far as benchmarks go. The Nifty did advance by around 0.3%. We saw a little bit of an increase in open interest too, but we must remember that when it comes to futures for Friday, the volumes in futures were the lowest in the last 7 to 8 days. And that was also on expected lines. There's a high probability that the volumes will remain low today and tomorrow and potentially on the first as well. In fact, throughout the week, you could see low volumes. So when you actually do see a sharp change in price or open interest, do remember that it's going to be on the back of lackluster participation. And when it comes to the Bank Nifty too, again, a little bit of an unwinding coming in, not too much to speak for. Right now, as far as the Nifty is concerned, we're watching out for, well, exactly where it is right now, 23,800 and thereabout. On the higher end, of course, we continue to see a little bit of, call writing building in around the 24,000 mark. It may even be a little bit hard to take it out if we don't see too much in terms of volumes. And of course, on the lower end, we have a little bit of, more put writing around the 23,500 mark. So it's a 500 odd point range that you can work with as far as open interest is concerned for this particular week. In terms of the big movers last Friday, at least in terms of change in OI, where we have NMDC, RBL Bank with saw shorts, we must remember that, of course, this is early days in the new series. So naturally, the change in OI will be considerably higher. Jubilant Foodworks did move on the higher end, as was the case for Paytm and Bata. Of course, some of these names are newly entered into as far as the F&O segment is concerned. And in terms of stocks which are unwinding, again, Indian Bank, Abbott India, CAMS, Adani Total, as well as UBL were in focus on account of short covering. But on that note, let's get in an expert opinion to see what he makes of these markets and, well, whether or not there are opportunities even in this case. So we have Bhavin Mehta, Director of Research, Derivatives and Strategist at Daulat Capital, who joins us on the show. Good morning to you, Bhavin. Thanks for joining in. Bhavin, one of the names that I mentioned in the list today was Jubilant FoodWorks, and I believe you have an option structure here. What are you looking at?
Yes, so good morning. On Friday, what we have observed was clearly that Jubilant FoodWorks, along with an extremely high volume versus last 10-day trading session, we have also seen stock trying to break out from its previous range. Adding to this, we have seen a very good amount of long built up for this particular counter. While the second half of Friday was kind of lackluster, we have seen a supply at higher end. This stock did held on to higher levels. So what we are anticipating is a possible breakout of this particular counter from this range. Along with a probable move towards level of 750 on upside. So what we will recommend here is call spread for next series. If you look at 720 strike call for current series at around 21 rupees. And 750 strike call is quoting somewhere around 11 rupees. One can look to buy 720 strike and sell 750 strike call, deploying a call spread. Here, your risk maximum will be around INR 10 and reward will be closer to 20.
All right. So that's as far as Jubilant FoodWorks is concerned. But the other stock on your radar, Bhavin, what one is that? And can you take us through that one too?
Yeah, so if we look at Siemens, we have seen a very strong drawdown a couple of days back. Post that, we have seen a follow-up selling. Even on Friday, this selling continues to remain abated. We are anticipating a move which could probably be closer to 6,000 level. However, one need to note that this stock needs to break down below 6,500. So this is a kind of an anticipatory call. We are looking for a breakdown going forward below 6,500. Good amount of short side build up in this stock. So one can look to deploy a put spread here, buying 6,500 strike put, which is currently quoting around 190, and selling 6,200 strike put, which is currently quoting around level of 90. So your risk reward ratio remains favorable 1:2 with maximum risk at 100 and reward at rupees 200.
Of course, Siemens at the moment, last Friday, it also closed below its 200 daily moving average. That is the simple moving average as well as the exponential moving average. At least that's what my screen is telling you. And that always means a little bit of trouble. As Bhavin has mentioned, should it move below 6,500, sustain there, where you can't rule out a move towards 6,000 as well. But Bhavin, on that note, thanking you for joining us and taking us through those two ideas in the markets. One is Jubilant FoodWorks and the other one is Siemens. But with that, let's also move on and talk about yet another brokerage update that we have. This time it's Motilal Oswal on Ipca Laboratories, and Varsha joins us to tell us what they are making of this particular pharma company. Varsha, over to you.
Good morning, Agam. Motilal Oswal has maintained buy on Ipca Labs now with upside potential of 21%. Now let's see what are the key reasons for that. Motilal is actually anticipating 27% earnings CAGR growth from FY25 to 27 with 170 basis points margin improvement. Now Ipca is actually relaunching approved products with stable pricing and filing 15 to 17 new products over the next 2 to 3 years. And company also plans to file 15 to 17 new products in US over the next 2 to 3 years. The next reason why Motilal has maintained buy is the integration of Unichem will boost margins for the company. EBITDA has been improved to 12.4% in Q2 FY25 as well. Now, company will leverage Unichem's portfolio in Australia, New Zealand, Europe, and rest of the world markets. Company is also launching new divisions in cosmeto and dermatology and also orthopedics. And Motilal is actually anticipating 23% CAGR in exports from FY24 to 27, driven by product filings and EU market expansion. And lastly, company is also developing a niche pipeline of 8 biosimilars in oncology, ophthalmology and anti-inflammatory therapy. So these are the key reasons why Motilal has been given a buy rating to IPCA.
Okay, Varsha, thank you so much for getting us all those updates with respect to Motilal Oswal and what they make of IPCA Laboratories. But time for an NDTV Profit exclusive. Instant loan apps are now under the Income Tax Department scanner as they issue notices to 40 fintechs. And Shrimi brings us the report of what she has gathered from her sources. Shrimi, over to you.
The International Taxation Wing of Income Tax Department has issued notices to at least 40 such fintechs, involved in the lending activities through mobile application. In fact, in the past fortnight, the notices were issued to these fintech under Section 133, seeking explanation over nature of transaction between the Indian arm and the foreign parent companies. Now, these companies are doing it that whatever the money has been remitted to the foreign parent companies showed as the fees for technical services. Now, what tax department is saying is that it couldn't be treated as FTS and it is rather the business profit, because somewhere they suspect that major chunk of the profit they earn here in India is remitted outside to its foreign parent companies where they are able to reduce their expense claims in India, and that will have a direct impact on the tax liability. So all these suspect is there, and that's why they are gathering more information on that. And besides, they are also ask them to furnish details as far as their rate of interest is concerned, and they have received so far from their customers, and in fact whether they are certified by Reserve Bank of India under microfinance regulation, and how their approach is when it comes to recovery, as far as default cases are concerned. And besides, they're also looking into the transfer pricing ruling as far as these transactions are concerned. So overall, they're gathering information, and they ask them to furnish the details by December 30th, which is today, and accordingly they will sort of form a view on how to take this case forward. And remember, this whole thing is coming at a time when center is quite vocal about the unregulated space of the lending activities, and in fact they have proposed a bill also in this regard. So it is interesting in a way where we are also tracking that how the enforcement action is parallelly happening as far as these fintech firms are concerned.
Okay, this could be the start of some very interesting things out there, because if regulatory action was needed somewhere, it was here for sure. So keep an eye out for what happens here next. May not have market implications, but certainly has implications for sure. Okay, on to more news and updates and the key stocks that should be there on your watch list, because they are certainly there on the NDTV Profit watch list for sure. And the first one amongst them is Adani Enterprises. Ventura recommends a buy, sees about 57% upside on that stock. JSW Energy is the other one. ARM has acquired a renewable energy platform for 12,468 crore rupees. Motilal Oswal sees upside here of 57 rupees per share on the deal. IOL Chemicals and Pharmaceuticals board has approved a stock split. Could be positive. Vodafone Idea is interesting. DOT has waived the requirement to provide financial bank guarantees for spectrum purchase in auctions. And ILFS Engineering and Construction Companies received project worth 302 crore rupees.
All right, well, moving on to the next set of stocks, we have IPCA Laboratories, where Motilal Oswal has retained their positive stance and it sees a 21% upside. Well, talking about stocks which could potentially be under pressure, we have Gujarat Fluoro, where operations have been disrupted at the CMS-1 plant. There's some reported casualties there as well. Moving on to Max Financial. Axis Max Life has discontinued operations as pension fund manager, and well, that could something that could potentially weigh on the company. And Ola Electric could also be in focus, even as the CMO and the CTO resign, two very important positions in a company like Ola Electric, which will also be in focus today.
Okay. Well, let's talk about all of these and more with our guest today, Kush Bora, founder at kushbora.com, Chakri Lokpriya, managing director at Red Strawberry. Both of them join us on the show. Gentlemen, good morning. Thanks for joining in. So much to talk about. It doesn't seem like 30th December because the news flow is very hectic. Now, Kush, I'd like to start with you first. The rest of the world is not under the eye of a storm, but certainly a tick of red there. Would our markets be sideways with a downward bias? Is that the nature of the market? And if so, what are the trades on the Nifty or the Nifty Bank?
Morning, Neeraj. Morning, Agam. Well, the news flow might be heavy, but the markets are really showing that 30th December, New Year's Eve kind of a move, aren't they? I mean, sideways consolidation for the last, 4 or 5 sessions, the 200-day moving average acting as a stiff resistance. Yes. And, you club that with the global news flow and the global market action, certainly paints a red picture. However, I'll try and, bring some cheer, into all of this, which is, technically what happens is that if you're knocking at a certain door for a while now, then you tend to sort of break it down or maybe at least breach it. That's what the Nifty's been doing for the 200-day moving average, which is 23,850 level. Friday also we did sustain above that for some time, but then the profit booking sort of brought it down. But 4 sessions we've been knocking at that door. Now 23,800 put option also has seen quite a bit of significant action, and there is some base building up. So while the bias and the index could remain sideways for some time, there is some hope coming that maybe in the near term 23,600, 23,800 this band could act as a support zone. Even if that happens, then there'll be some reason for the shorts to get covered and the index to go past 23,850. Is there a trade on the Nifty yet? I would suggest not so much. The view remains pretty much the same that it was on Friday, which is the broad range is 23,500 and 23,850. Whichever direction the Nifty breaks is the near-term trend of the market, and that's where you should go and initiate a trade. However, if you really want to and if you must, then perhaps have a mild positive bias on the Nifty with a stop loss around 23,700, but that is only if you must. Otherwise, just wait for the Nifty to give you a directional move and then initiate a trade.
Okay, so wait for the directional move on the Nifty. I'm presuming the same for the Bank Nifty as well, and couple that up with your stock recommendations, Kush, today.
Sure. So, see, Bank Nifty, while, it might seem technically slightly better placed because it's above the 200-day moving average, and some of those reasons, the bias here is starting to turn a little negative, hence a little cautious view on the Bank Nifty. We did discuss, a short trade on the Bank Nifty if the 50,900 support zone is taken out, which it wasn't, but we still saw a good amount of profit booking from the highs on Friday. So, Bank Nifty also, I'm looking at a slight negative bias, perhaps as I said, below 50,900, the 200-day moving average, which is at 50,300, will come into play. So my bias is turning slightly negative on the Bank Nifty. Let's see if that gets negated. Not initiating a trade just yet, similar moves like the Nifty, but slightly negative bias on the Bank Nifty. Now, as far as stocks are concerned, incidentally, both the trades are on the long side. Lupin has had a very good run. It's consolidated for a while and then given a breakout. Also, there is a 20-day and a 50-day moving, crossover, a golden crossover of that. You've seen good volume pickup. So Lupin is on the, on the long side. 22,900, 2350 are the targets. 2170 is where you place that stop loss. From the IT space, a lesser discussed name, which is FSL, seems to be in a consolidative range, but now after the profit booking, around the 50-day moving average support, the trend is turning positive once again for this one. So FSL is something that you consider on the long side. 377, 385 are your targets. 362 is where you place that stop loss.
Right. Well, I just want to add a pointer to what Kush was mentioning right now. If you consider the index futures positioning of FIIs, they only have about 17% longs at the moment. Now, you must remember that at the moment, the absolute number of positions are not very high. But 17% is much closer to, by that I mean 17% long positions, and that means that the balance 83% are short. The number is a tad bit stretched, there's no doubt about it, because when this number goes to around 10 to 15%, that's when you usually see a very, very sharp short covering coming through. That hasn't reached there, but it is still a tad bit stretched, it seems, in terms of FI positioning. So that's something that you must bear in mind. But on that note, let's get in Chakri Lokpriya as well into the conversation. Chakri, good morning to you. I don't know if you've had the chance to look at the JSW Energy acquisition. It's been a significant one, well over 12,000 crores worth. What are you making of this acquisition for JSW Energy specifically? What does it mean for the company and the power generating sector as a whole? What's your stance here?
Good morning. Thanks for having me. Yes, in terms of what it does is for JSW Energy, adds to its long-term growth rate, which is what the stock was trading on. So, these new order wins kind of strengthens that position that these new order wins are coming. So that will support the stock price. Now, power generation clearly is important for not just JSW Energy, but across the whole space, whether it's thermal or green. So right from NTPC to Adani Green, all these companies have very strong growth numbers, and order wins like this will help strengthen that case.
Okay, so Chakri, is this, I mean, the people will look at the stock having run quite a bit already. Does it still offer value, JSW Energy, and or are there better plays in the energy space?
The stock is actually, again, purely based on its ability to continue to win orders like the one it won today. And so that growth path seems to be fairly secular for not just this company, across companies. But to answer your question, I think there are other companies which have fallen. Last time we spoke about Adani Green. Again, I would talk about it because, the stock has fallen quite a lot and there is a huge amount of growth runway. They're adding 60 gigawatts over the next few years. That provides sufficient runway for a significant upside.
Okay, so that's one. Chakri, there are 3 listings today. There were 5 in Friday's session as well. And I think some of them, like Dam Capital, etc., listed and then actually surged in trade later. So from the 5 on Friday and the 3 today, which is Carraro, Senores, as well as Ventive Hospitality. Have you looked at do any of these interest you now that they'll be a part of the secondary market, or in Friday's case are a part of the secondary market already?
Yes, the hospitality as a space is quite strong. And, these guys are there in all the strong markets, Bangalore, Maldives, so these are all areas in which the growth potential is very strong. Pricing is also strong. So a market and the subscription data also was not very strong, which again provides some kind of a buying support for the stock from a technical perspective. But fundamentally, as a space looks good.
Okay, so you're saying Ventive. So if it lists at or slight premium, you are saying you would be comfortable going out and adding to your portfolio?
Yes, indeed. That's correct.
Interesting. Agam, well, we spoke about hospitality. It seems to be turning out that way.
Yes, certainly. I was doing a scan of the stocks in the markets which have held their own and stayed and strong. And one of the names was OFSS, that's Oracle Financial Services. And I actually wanted a technical view on this one as well. Kush, your observation here and a possibility of a trade as well?
So that's a good find. It did pop up on our radar. The reason it didn't turn out to be a trade is because the momentum's missing. So it's not for someone who wants to do a quick trade, let's say for today or let's say maybe a week. But if you see the medium-term trajectory, you see the slope of the averages, all of them are actually pointing north. Correct. Even in a market like this, which is correcting, consolidating, the stocks actually, as you said, held its own and perhaps even trading with a mild positive bias. So this is for someone who wants to take a positional bet for a 3 to 6 month kind of a horizon where you could see an upside of anywhere from 5 to 10%. That's the kind of steady up move that the stock is seeing. So very clearly the stop loss on this one is close to the 12,200 mark, close to where the 200-day moving average is. We've seen the stock take support at that level or just under and rebound from those levels. So that's your very clear stop loss. On the upside, you're looking at 13,000 as the first target, and then once that is taken out, 13,400 as well. So as I said, this is not someone from, for someone who wants to take a quick trade, but a positional bet. This seems like on a very strong footing.
Right, and Kush, the Paytm is the other one. It's managed to close about 1,000 last Friday. Do you think it will see more longs from here on?
Definitely. I think every dip that's come out in this stock for the last 6 months, and by that, if I want to quantify that, every dip towards the 20-day moving average has actually been taken as a buying opportunity. Very strong up moves. Whatever you are seeing in terms of dips are just profit bookings once the stock hits those overheated territories. Even now, if you see, the last dip that the stock had around close to the 950 mark was also the 20-day moving average support that it's taken. So not a bad idea to keep accumulating this one on declines, and you've got a very clear number. Every time it dips to the 20-day moving average, you go out and you accumulate some more. So it could be a near-term trade as well, but if you're looking at a medium-term position, then buy on dips closer to the 20-day moving average is the strategy that you could deploy on this one, and might turn out to be profitable. At least that's what the last 6 months pattern is showing.
Okay. Well noted. So much more to talk about. HDFC Bank has been introduced in the Jefferies Greed and Fear portfolio with a 4% weightage. Vodafone Idea has gotten relief from DOT on the bank guarantees. They've sold their stake to settle debt as well. Ola, so many things to talk about. We'll take a very quick break though. Come back and talk about some of these on the other side. Stay tuned.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Back with India Market Open right here on NDTV Profit. We are about a minute and a half left from the pre-open session. But, you know, there are newsmakers and then there are some stocks which have, like we said just before the break, have some technical elements to themselves. So, you know, BFSI is one such, right? And when, as we welcome in Parag Thakkar, head of fund management at Fort Capital, joining in on the show right now. But I want to start off with banking because I think after a point of time during this time, it's pointless to talk about what the market will do. I mean, who knows? We anyways wait for the earnings season, we wait for the budget and then try and figure out what direction market will take. But specific pockets could be interesting, right? Sure. Now, the last few times that we've spoken, Parag, you've sounded constructive on BFSI.
Sure.
Today, Greed and Fear has introduced a 4% weightage to HDFC Bank. There are a lot of people who are talking about some of the large banks and NBFCs which haven't performed for the last 2-3 years and how they have gone through the time correction which stocks invariably go through.
Absolutely.
And maybe 2025 could be a year of an uptick there. Why should that be the case? Why can't there be one more year of a time correction?
Correct. Very right question, I would say. Just to put a disclaimer, whatever I'm saying holds true for medium to long term. No day traders or should take position based on what I'm saying because this is a medium term view. First of all, let us look at why they have corrected so much. Why, for example, ICICI Bank has gone up, but it has not performed to the level the numbers came, right? Because FIs kept selling. And why FIs kept selling? First understand that, right? Because they are holding, first of all, banks. Second, the interest rates are going up in US. Like US 10-year was going up. Dollar was strong. Now, after the Fed rate cut also, because of the Trump trade, the US 10-year we are seeing at 4.6%, right? Dollar is at 108. So, generally when dollar is so strong, you don't see FIs money into India. And so they keep selling these banks. So banks have become attractive and more attractive and more attractive. So to what extent it can go, right? That is my question. So that is why medium to long term and from economy perspective also, we lost this year fully because of the election, because of prolonged monsoon, because of summer, less government spending. And now government will also focus on growth, right? So now RBI will also try to focus on growth. Right now I know there's a liquidity deficit in the banking system, but I think it's a seasonal matter. It will cure itself out. And government will also, as we are hearing already in the budget session, we are expecting some sort of consumption boost, some sort of action from government to drive growth, some sort of accelerated government quality spending on infra. So I would say that, and see, remember one thing, that from banking perspective, most important thing is macro. India's macros are good. Banking balance sheets are good. There are one or two problems in terms of unsecured loans, but which is just 10% of the loan book. The corporate loan book, which is a large loan book, is very clean, right? The cleanup has already happened. So I would like to say that some stocks like Bajaj Finance, for example, as you rightly said, they have not moved from last 3 years. In between, we saw a big trigger in that Bajaj Housing getting listed, which got a market cap of 1,05,000 crores, where Bajaj Finance hold 88% stake. And Bajaj Finance has done an investor day on 10th, where they have said that they will double their AUM in 5 years. And he said that it was conservative. He can do it that in 3 to 4 years if the economy tailwind is there.
So I would say that the company which is growing at 20% with about 20% ROE, if it commands 25 PE, in my view, in next 18 to 24 months, Bajaj Finance, whose market cap today is, let's say, 4,30,000 crore, can go to 6,10,000 crore. Just because of FY27 PAT number, which is around 23,000 crores. Right? On price to book basis also, if you remove the valuation of Bajaj Housing Finance, it is trading at 3 times. Now, when in this world Bajaj Finance is available at 3 times for a 20% ROE and 4.48% ROA. So, same way if you see Axis Bank, it has fallen to a level where there is no growth which is priced in my view. If a bank is available at 11 PE, price to book is 1.3x, now there is no growth which is priced in. So, if they just deliver what they are delivering, they show consistency in terms of margins and credit cost, there is a significant upside there. And of course, you need economic recovery, of course, you need these macros to settle down. Because dollar index continuously rising and US 10-year continuously rising in spite of a Fed rate cut is a Trump trade, right? Yeah. And that Trump trade, in my view, should reverse when Trump comes actually, because market is always buy on rumor, sell on news. So when Trump comes back, this trade will reverse. And remember, just one last thing on this, that whether Trump would want a strong dollar, no. Because why he is imposing tariffs? Because he wants to make his own country and his own country's companies and jobs to be protected. Now, if dollar continues to appreciate, the import cost is coming down, and his exports are becoming uncompetitive. Whether he would want that, when Fed is cutting 100 bips interest rates, US 10-year is rising by 100 bips, completely opposite. Yeah. Whether Trump would want that, I don't think so. And so I feel that all the negatives are right now completely into the system. Now gradually things will turn positive, and that is why I am saying whatever I am saying is not for intraday, it is not for 1 month. It will unfold itself over next 3 to 6 months.
Okay, well, so viewers, if you buy this thesis, then some of the things that Parag likes are the likes of Bajaj Finance or an Axis Bank, Bank of Maharashtra too maybe, or PSU banks, some of them also.
One good thing is that all PSU banks had large corporate exposures. That is all cleaned out.
Yeah. And valuations are attractive.
So valuations are attractive. So you will not see that 40% growth in earnings, because all those provisioning items which were there have now come into PAT. But you will see a non-cyclical 10 to 12% earning growth without any large problems in the credit cost side.
Yeah, and then viewers, you factor in that if indeed the government capex and maybe hopefully private capex kicks in, and if the PSU banks are the lenders where people go to as well, then the growth comes in, and that might add the cyclical element to the non-cyclical growth as well. So keep an eye out. I mean, some of these could be very, very interesting. So definitely keep an eye out on the banks for sure. Just before we get to the brick brokerage call, Kush, very quickly, can HDFC Bank or Axis Bank, is there a trade there? Very quickly.
For HDFC Bank, there is. It's, again, back to those 1800 odd levels. So sustaining above or around those levels, can push it to 1830 in the near term, and, 1855 as the second target. Stop loss on this one, close to 1770. So consolidating with a mild positive bias, I think HDFC Bank there still is. Axis Bank hasn't really shown a near-term bottom or signs of recovery in place, so I'll hold that one.
Okay, well, it's 9:05, so it's time for the big brokerage call for the day, and we have Morgan Stanley, and they've released a report on Zinka Logistics. It's not looking good from their perspective, but we have Anushi back to tell us why they are negative on this particular company. Anushi.
Hey Agam, a very interesting note that we've seen from Morgan Stanley on Zinka Logistics. They've initiated an underweight trading on the stock, and this is with a target price of 450, which implies around a 16% of a downside. So firstly, what they've emphasized is the share price movement that has happened post their November 24 listing. It's already up around 105%. So considering the kind of stock price movement that has taken place, the risk to reward ratio remains unattractive at these levels. Along with this, they have a higher market share in the core tolling business. So a limited room of opportunity in terms of TAM that they're seeing, that's the total addressable market size, and thus their growth potential for the same are on the limited side. They expect a limited upside to the growth assumptions that they have. Along with this external risk factors around the merchant discount rate visibility, it's unclear on what this could mean on this changes that could take place in the merchant discount rate on the medium term growth and margin assumptions for the business. So that is another factor that one should be considering for along with this new services. These are still in the early monetization phases, so they are yet to be proven on how they could lead for the growth for the business. So while the company still has built a niche and competitive moats in the large fragmented market that we are seeing, and the core business has a potential to deliver around 24% of CAGR growth between FY25 to 27 after the kind of movement that has taken place in terms of stock price, the kind of growth assumptions that are there for medium term. Morgan Stanley remains wary of the same. That is why we are seeing the underweight rating and a target price of 450, which is again a 16% of a downside.
Okay, well, thanks a lot for that, Anushi. Interesting one out there. Chakri, by any chance, any thoughts on a Zinka or any of the other logistic players? Do you like the space and Zinka in particular?
I think logistics as a space will look up whenever the interest rates are cut. Companies like, including, if we extend the logic a little bit more, Container Corp, it's corrected so much that, the growth potential is being kind of ignored. So Zinka, on the other hand, stock has run a bit too much too fast, and also the toll market is a very price sensitive area. So the margin accretion is very unlikely for a Zinka type of company. So I'd rather stick to companies which are still not, which will benefit from an interest rate hike, interest rate cut, which was likely to happen early in the next year.
The other area I wanted to talk about was healthcare. Pharmaceuticals, specifically in healthcare right now, there's been a little bit of gradual up move in a lot of these stocks. There's interest which is returning. Do you see any opportunities in this case, especially now that there's a little bit more uncertainty when it comes to the US Biosecure Act?
Yeah. So basically, we have some names in pharma stocks like Granules and Dr. Reddy's and all. But what I feel is that, see, when you see a real economy which is little bit slow, when you see a rupee which is depreciating, there is a tendency by hedge funds or traders to move out of the domestic cyclicals and to safer names. In safer names, when you consider it is pharma, FMCG and IT, right? And telecom, of course, telecom, largely two players. So what I'm saying is that, when that happens, in FMCG, you are seeing very slow growth. Many companies are giving very, of course, with ITC having this hotel demerger, there's a traction there. But generally, we have seen that FMCG companies have given very low. Godrej Consumer Business Update came, and so there is a natural movement towards pharma. That does not necessarily mean that pharma stocks are cheap. Right. But of course, and this is not, so I'll talk about some things which are not in our portfolio, but I would see pharma formulations, domestic formulation, branded formulation business is a great business to have. Yeah. So I would say that Torrent Pharma we had in our portfolio at one stage, or Sun Pharma, or those are, the real jam businesses. Yeah. But right now, I think the valuation gap between pharma and the domestic cyclical on the other hand, because everything is negative for domestic cyclicals, right? So there is no growth in the real economy. There is, this entire year has gone waste. So I would say that is a more preferred space to be as a contra buy, rather than just chasing the momentum, because that can give you money in 1 or 2 months. But ultimately, we are here for making a long-term wealth creation for our investors.
Yeah.
Agam, JSW Energy is perking up in the first. As the pre-open rates have settled down, you clearly see that stock being up 4%. So big sharp jump up out there. Keep in mind. The other one is Garuda Constructions, which we highlighted. Utpal Sheth has bought about 4.8 lakh shares, and noted investor, and therefore worth pointing out. And the last one is Ola Electric. Now, here's the problem with Ola. Like we said, 2 senior management personnel have resigned, as a result of which this stock, which was down 3% in Friday's session, is down 3% on the pre-open session as well. Chakri, the opinion on Ola is so divided and so binary. Some people love it, some people just hate it. I'd love to know from you, as an investor, would you take a bet on Ola Electric? Why or why not?
As a company, it's done quite lots of good work, and but as an investment, it was a very expensive IPO to begin with. And it's a company which is going through a lot of growth pangs. So therefore, I would not stay on the sidelines of Ola Electric, and rather buy the established players like TVS Motors, who have the whole ecosystem very clearly defined.
Kush, JSW starting 4% higher, so clearly the market is giving it a thumbs up. If somebody was long, take money off the table or stay long here. Conversely, if somebody doesn't have a position, can somebody buy also as well?
No, I'll go with the first option, Neeraj, for sure. The near-term structures, very negative on this one. I think even if you discount the news, even from the price action perspective, this is actually a rebound or a recovery from slightly oversold territories. And, there is a very clear resistance around that 665 mark, where there's a convergence of the 20 and the 200-day moving average. So for me, I'll take the first option that you mentioned, which is take money off the table if you've got a long position. If and when it crosses 665, sustains above that, maybe we'll consider. But at the moment, this is more of an exit trade.
Right. Chakri, I'm looking at the EMS players, extremely expensive at the moment. Names like Dixon Technologies, PG Electroplast, Keynes Technologies, they've run up significantly. My question is that how much of a correction would you like to see in some of these names before you can start considering an investment in these names?
No, you're right that, there's valuations are expensive. But on the other hand, these are the companies where the growth is most visible, with US elections, all that out of the way. All those orders come back, export orders that is, for these companies, the growth which is expected out of these EMS companies will continue, hopefully to surprise on the upside. So, wait. I wouldn't, if you hold the stocks, I would still hold them simply because the growth is on their side.
Right. Kush, overall Realty seems like it's going to open a life high. What's the view here?
So, I'll wait this one out, and I'll tell you why. The bias is positive, the structure is positive, all of that working for it. The only thing is that it's seeing a mild negative divergence. So if that gets negated, then a move towards 2500, perhaps higher levels, also welcome. But if not, then you could see some profit booking. So don't chase this one. That's the only limited point.
Okay, 30 seconds away. Kush, based on the pre-open session, the one top call, you have 20 seconds to tell us.
I think I'll stick to the ones that we discussed in the morning, which is FSL. Looks to be on a strong footing. Beyond 370, momentum will kick in. So stick to FSL.
So First Source or FSL, you are happy buying it at 369, 370, Kush. What's the target?
As we discussed in the morning, 377 and 381 is the target on this one. 385, I'm sorry, and 362 is the stop loss.
Okay. So about 7 rupees stop loss. The target is about 15 rupees higher. Watch out for that one. Here's how the markets are starting off this Monday morning, the penultimate day to the last day of trade for calendar year 24. We're starting off flat, which is not bad actually. The world markets were looking a bit more in a tizzy. IT is about a flat too, banks flat, mid caps and small caps I doubt doing dramatically different. Maybe Agam will have better luck in movement. So small caps though are down 0.25%, so keep that in mind. But let's bring up the large caps and show you where the movement is. Hardly any movement. So less green. Let's start with the green. Adani Enterprises 2% higher. Now this could be on account of two reasons. One, there's a note, of course, but two, the first flight in the Navi Mumbai airport brings the Navi Mumbai International Airport firmly in focus, housed under the Adani Airports business, which is housed under Adani Enterprises. I reckon that's the reason. Bharti Airtel, Adani Ports, Nestle, ITC, but few and far in between the gainers, right? The losers have a lot more. So HDFC Life down about nearly 1%. JSW Steel about 0.75%. Metals I think are doing weak. So JSW, Hindalco, Tata Steel, all of them are looking slightly wobbly. Amongst the heavyweights, I think Maruti, Reliance, HDFC Bank are the three which are sulking. Agam, not too much luck on the large caps. The only one worth really making a move is Adani Enterprises, now up 2.5%.
Yeah, certainly. So that's as far as your benchmarks are concerned. Let's take a look at what's happening in the broader markets. And Neeraj to a certain extent has indicated that when it comes to the small cap and the mid cap indices, well, they're more or less moving in tandem with the benchmark. So the mid cap index is looking at about a 0.25% cut, as is the case for the small cap index. And in terms of your other factors that we're watching out for is as far as your sectors are concerned, The VIX has risen, sure, fair enough, it's up around 4%, but along with that we have marginal gains for the pharma sector, the FMCG and the healthcare space. What's losing out to a certain extent is the Nifty Auto and the oil and gas. These are relatively more influential sectors. The media index is down around 0.9%, but that's a little bit more volatile in general. And along with that, the IT index is marginally in the red. Not too much to speak for. We were expecting a quiet start. That's exactly what we've got right now. And let's then shift to some stock-specific action which has been in focus. So we were talking about JSW Energy, and it has seen a very, very sharp up move. In fact, it's bounced back. It's up around 6%, and we're already seeing good traction as far as volumes are concerned in the first few minutes of trade. But let's talk about a handful of other movers as well, which were in the back of news, focus in the back of news. So Ola Electric is down around nearly 3%. We have the CMO and the CTO, which have stepped down. It is a little bit of significance in news because these are the two most important functions as far as a company like Ola Electric is concerned, besides of course the CEO. IL&FS investment, engineering, actually that's what we wanted to look at. They've won an order, and we also have Max Financial, which is also in focus. And along with that, a handful of brokerages which will be in the spotlight today. So we have Ipca Laboratories, where Motilal Oswal remains positive, and it's the same for KEI Industries. They have an upside of anywhere between 19 to 21% for both these counters. Zinka Logistics, on the other hand, where Morgan Stanley has downgraded the stock, looking at a 16% downside, on the back of which we were at least looking at a 1% cut for now. But the question really is that are we going to continue to see the subdued movements over the course of the next 2-3 days beyond that, or can we start seeing an uptick come the 2nd of January? That's something that's going to be a wait and watch out for. But in general, it's a quiet start to the morning, Neeraj.
Yeah, Agam, certainly a quiet start to the morning, not too many names. I think the one which is standing out is JSW Energy, 6% higher on open, and certainly something that you want to keep a very, very keen eye out for, because that is the one which is really making the waves. Opening thoughts, Kush Bora, flat start, anything that stands out for you from a trade perspective?
So I think we will take this move, right? I mean, the global markets were negative. We opened up lower, but we are seeing some traction build up, at least on the indices. Bank Nifty also moving in the green. That's actually a very healthy sign. I wouldn't still suggest a trade on the indices. Perhaps a day of consolidation. One stock that stands out, Lupin, something that we'd already discussed pre-open, so that is up 0.5%. But one other stock that stands out is Graphite India. It's seeing some traction, some action today as well, 1.5% up, fighting the 200-day moving average resistance around the 565 mark. If it does sustain above that for some time, I think I won't rule out a move up until 580 and 595 as well. Support zone for this one comes in at 555. So that's one stock that is showing some traction in the market, which is rather sideways and perhaps consolidating.
Okay, interesting. Graphite India. Parag, to you, just the broader thing, right? We are ending calendar year 24. Beginning 2025, it's marked by we finally come into terms with the fact that yes, it's a DI followed market, but FIs are important too, right? We've seen consistent outflows. They ebbed for a bit, but they've restarted again. You mentioned the reversal of the Trump trade, post-Trump coming in. Could that also mean a reversal of FI flows into India?
Absolutely. So I am of the view that, and it's a completely contra view. So I can tell you that see, once rupee has also reached say 85.5, right? So rupee has depreciated a lot. So it's a good entry point for FIIs. And you are entering in a country which has not shown growth for last 1 year. Say Q2 GDP growth was only 5.4%, but with a very good macro, right? Current account deficit is low. Right, banking balance sheets are strong, right, and corporates are under leveraged. Unlike in China or wherever, where corporates are too much leveraged, here corporates are under leveraged. Everybody is talking about financial discipline here, right? So you are entering in a country which is financially disciplined, where the government has managed macros very well. Of course, growth has been off track because of the election and monsoon and all that. But growth is a factor. If your it is like this, that if your balance sheet is strong, then definitely your PNL can improve. But if your balance sheet is broken, then you cannot improve your PNL. So now that rupee has depreciated a lot because of the strong dollar, I would say that's a good entry point for FIIs in a market which is stable, which has a stable political mandate, current account deficit, and as I said, fiscal deficit, and all the balance sheet parameters are in place. Even corporates are well placed. So I would say that what it requires is just, I would say, a push for growth, an intent of growth, which can come in budget, hopefully. And then I think FII money will chase, and that is the time when large caps will do well. That is the time when banks or Reliance, those kind of stocks will do well.
Interesting. Okay. Well, certainly watch out for that for sure. Chakri, if that were to turn out to be true, I mean, would you, non-financials, where is it that one should place bets? Today, for example, Goldman Sachs has a note which says that they are going out and buying IT, Infy is their top idea, and they like IT per se. At the same time, a couple of others have come out and said that IT valuations are looking steep and might correct a little bit post Q3 numbers. Where are you placing your bets, both from a fundamental perspective on IT as well as from a perspective that if FI flows were to come in, yes, banking benefits, but IT is the second largest weightage. Clean companies known very well might also see inflows.
You're right in terms of, there are two different types of companies. On the one hand, IT is purely export dependent, and US is a very important market. If US economy continues to revive because of all the various well-discussed factors, then IT will clearly be a beneficiary, both large and mid-cap. So whether it's Infosys, HCLT, or the manufacturing-focused IT companies like Cyient, all these companies will benefit from increased IT budgets. On the other hand, whenever interest rates are being cut in India, then the growth, the cost of capital comes down, and that should help the industrial companies. And where the most secular growth is still in the thermal power areas, because they are long-term, in the true sense, the growth is very strong, and they are less impacted by medium-term fluctuations in growth expectations.
Kush, coming on Siemens, it's taken a huge knock off late. I believe that it's hovering somewhere around its 200 daily moving averages right now. It does seem like it's in a little bit of trouble. What is your reading here? What would you do with this?
So, Agam, it was starting to shape up rather well, and this I'm talking about a month and a half ago, right? But it's given up all of that, and how there has been this massive fall. Now it's just to bring that 200-day point, 200 DMA point on, it's trading below that for the last 3 to 4 sessions, and I'm not sure if the fall is done yet. And the reason I say that is because on the way down, the volumes are still high. Even if you consider that, this has been a pretty low volume week, and the last couple of days, the volume on the way down for this one are still, noteworthy. So I would hold up my horses. I wouldn't go out and buy just yet. Shorting right now doesn't make sense because it's already seen, quite a bit of a sharp cut, about 20% or so from the top. So I will wait. To see if any kind of, positive divergences emerge, or if it reaches the oversold territory. That's the other thing. Despite the kind of fall that the stock has seen, it's not yet hit the oversold territories, which means there's still room on the downside. So for me, a meaningful support zone for this one actually comes in close to the 62-50 mark. If it does take support at that level, it shows any kind of base formation in place, then perhaps we'll see if a long trade or a long positional trade is in the works. At the moment, I would steer clear and just put it on the wait and watch list.
Right, Chakri, I wanted to extend this point in this conversation around names like Siemens as well as ABB India to you as well. And it's not just Siemens, right? Because ABB India is also something which has seen a little bit of come off. Now, 2024 was a year in which we had seen vast improvements in earnings for at least some of these names, but it does seem like they're going out of fashion at the moment. How are you viewing, movement on names like these?
ABB, Siemens, all these companies trade at, rich valuations. And for those rich valuations to be justified, you need growth. That growth has slowed down due to well-known factors within India, domestic factors where public capex has come down, private capex has not picked up, and interest rates are high, which is preventing further capex. So until these three factors reverse, which is at least one is within RBI's control, and second is, taxation has to be Partly, FII selling has happened because of the capital gains tax, which has increased. All that is fine as long as growth is fine. Growth is strong. As growth slows down, we've seen the opposite of a strong FII selling.
Well, okay, gentlemen, to all of you, wishing you a very happy 2025. May it be a much more linear and smoother year, though volatility is also welcome from a trade perspective, as Kush will say. But thank you, all of you, for joining in today and giving us your thoughts. Parag Thakkar, Kush Bora, Chakri Lokpriya. Really appreciate your time. Well, that's our guests for the morning. Now, on full focus on the corporates. And 9:40, remember, viewers, will touch base with JSW Energy. Currently, we are going to be in a conversation with a mid-sized company, Apollo Micro, in focus because an order win came in from BEL. Let's first get in my colleague Anushi to set up the conversation for us. Anushi.
Hey Neeraj, a lot of important factors that we should be looking out for Apollo Microsystems. This pertains to the kind of business they are into, their R&D investments, their focus on order book along with some preferred defense player supplier. So about the company is into development and assembly of custom-built electronics and electromechanical systems. They cater to segments like aerospace systems, ground defense and space and more. In the recent developments, they have emerged as the lowest bidder for around a 21 crore order from BEL. Along with this, if you go back and see their last quarter's order book, that was around September end, that stood at about, they had secured a fresh orders worth about 130.9 crore, which are yet to be executed. So definitely focus would remain on what the current order book stands like and what's the kind of order inflows that are being projected. In H1 of this financial year, they have seen about a 74% of an uptick in terms of their revenue, which stood at about 252 crore, while their margins have more or less remained in the 21.5 to 21.9, so in the 22% of range that we are seeing. Net profit had clocked in about a 194% of a growth. What is interesting is their FY25 guidance for the year, where they may outperform the guidance of 40 to 45% of revenue growth. This is again in line with what the expectations is for FY27. Want to be 1,000 crore of company by then. EBITDA margins expected to remain in the 22 to 24% of range, and they expect to end FY25 on a strong note in account of their order book where that is concerned. Coming to R&D picture now, their research and development, in that they spend around 7 to 8% of their consolidated revenue. A lot of key projects in focus. This includes universal homing system for light and heavyweight torpedoes and more. In terms of what their manufacturing capabilities are, they have a manufacturing facility in Hyderabad. Along with this, there are 2 additional facilities which are under development. So more on the production side that we can envision from the business is yet to be seen. So this is the overall outlook that is on Apollo Microsystems and what we can expect from the business ahead.
Okay. Well, thanks, Anushi. And let's pose some of those questions and some of those pointers to Mr. A. Krishna Sai Kumar. He's whole-time director of Apollo Microsystems, joins us right now on the show. Mr. Kumar, thank you so much for joining in. Good morning to you. My name is Neeraj and would love to understand, let's start off with order flows, because that was at the behest in which we kind of requested you to come in as well. What has been the experience in calendar year 24? Because while the first 6 months or 9 months seem to be a bit of a lull for defense companies, I think there is a bit of a pickup in quarter 4 of calendar year 24. And I think a lot of brokerage notes have come out and said that Jan to March will see a bunched up order inflow for defense companies by and large, and therefore everybody under the ecosystem will see a lot of benefit, maybe including you as well. Can you tell us a bit about this?
Morning, thanks for pulling me on to the show. It has been lull in the sense, like, for us, I would say it's much better than, the previous financial year. There's a consistent order flow. That's how I have to say, which is there in my, kitty. And there are a lot of, orders which are in pipeline, which already my customers already have on their hand, which will consistently keep flowing into our, kitty in a few months to go. As we have been giving a guidance that we'll be growing at a rate of 45% to 50% or upscale year-on-year basis. We still continue to be bullish on that similar guidance. And there's a lot of orders presently already on hand. And at the same time, a huge order book is already there with my customer and a lot of orders on pipeline, which we are expecting. Some very big ticket projects are also expected in next 3 to 4 months in our company, which is to a tune of something like, revenues of last 3 years, put together, and much more than that, as a single order is what we are expecting. 1,000 crore and above, 1,500 crore and above, kind of an order, single orders we are expecting in next few months down the line.
Well, just for the viewers, the fourth quarter is the one where the order awarding activity increases substantially. And of course, companies like Apollo Microsystems does stand to benefit. So what Mr. Sagamar is saying here is, in fact, corroborating this further. But let me come back and ask you about, your current order book and how much you expect to execute in not just the balance of this financial year, but also in FY26 going on.
As I have already told, this year you will see 45% growth to compared to the previous financial year. And the next financial year, our internal target is 100% growth, but we would definitely achieve a 50 to 55% growth to the current financial year. And the current order book would roughly stand around 550, 570 around with the current order book around.
So some staggering numbers that we're looking for and that we're working with. So firstly, the management is suggesting that there's a possibility of them doubling revenue, but they are certainly going to do 40 to 45%. And I believe that you will continue to maintain your margins between 22 to 24% as well. Well, based on that, I want a better understanding on the, how these deals are made, and some of your largest clientele. I believe, of course, the government of India will be one of your larger clients, but do you have any traction coming in from the private sector, as well as whether or not you have any other traction coming from abroad? If you could give us a better picture of that as well.
Yeah, very much. See, primarily, we have been a tier 2 and tier 3 suppliers to the lead integrators, initially starting our development projects with the DRDO and subsequently working along with the lead integrators like publicitors like PDL, Bell, HAL, and many other lead integrators who are, taking a TOT and manufacturing a complete weapon like Bharat Forge, economic explosives and all. From a tier 2, tier 3 supplier, we are transitioning ourselves to be a tier 1 OEM. Manufacturing our own weapons. We have recently taken orders for a surface to air, rocket, and anti-submarine warfare rocket. And we already have developed, couple of mines, complete platforms, for Indian Navy requirement. We have a complete flavor of underwater mines that we have developed, right from 100 meter up to 400 meter depths, and including limpet mines, which are, man-portable, driver-driven, this thing. So we are also working with this, private industries who are, boosting the as a lead integrators, manufacturing weapons, and that's the reason we are scaling up our infrastructure. Also, we have around 55,000 square feet facility today. We are ramping up to close to 4.5 lakh square feet facility, which one of the facilities is ready. Will take positioning in month of mid-Jan, something like that, and other facility by June, July. So yeah, we are working with the private industries, and it's a lot of private industries who are lead integrators for the weapons.
Okay, Mr. Kumar, I just want to take the clock back to the order flows because I just wanted that clarity. Did I hear you say that you expect single orders, not just one but many, each of which could total up to the last 3 years' revenues? Did I hear you say that?
You did hear loud and clear.
Okay, loud and clear. Okay, so what is the current order book like in terms of a number? And let's assume I'm giving you 12 months. Let's assume you get these orders over the next 12 months, 1 or 2 or 3 as the case may be, and some more, and you will execute some of the orders as well. What do you expect the growth in order book to be like between now and when we, let's say, again talk in December 2025?
Today the order book stands at around 550, 570 around. So by 2025, December 30th, if we are speaking with each other, I think our order book should stand somewhere around 2,500 to 3,000 crore minimum.
Okay. And is that the reason why you are expanding this operational space? I believe I heard you say 4.5, but I think the December PowerPoint presentation that you made says that by June 2025, your total operational space is expected to expand to 3.5 lakh square feet. So is it 3.5 or 4.5? And would this help you execute faster?
Exactly. The upcoming facility, is Unit 2 is around 45,000 square feet, and the Unit 3 is 3,50,000 square feet. And my current facility is 50,000 square feet. So that's how you.
So Unit 2 is 3.5, and over and above that, 1 lakh square feet. So about 4.5.
Unit 3 is 3.5.
3.5 will be in June 25. Okay. So, and also just a reiteration. So you were targeting 50% CAGR growth, I believe you mentioned. So two-part question. One, for how long do you anticipate to grow at this 40 to 50% growth rate? And is FY25 also 50%, or FY25 could be more than that? I think you said 100%. No.
We are in the fag end of FY25, right? This is
right.
Q3 is almost over actually. So it will be around 45% the previous year. That's the guidance which you have given earlier, and we stand with it actually.
Okay.
And next year we are expecting 100% growth, but pessimistic, we should still continue to grow at 45 to 50% CAGR.
And no, but for how long would this be? Sorry, just one last thing. Let's assume you don't grow at 100%, grow at 50% in FY26 as well, which is not a bad number. How long do you expect to grow at 45 to 50%?
So yeah, instead of giving a number of years, I would rather try. I would try to put it in a different way. We have participation of along with the DRDO in almost several, all the indigenous missile programs. We have participation. 60% of the technologies which are part of these weapon programs, we have a participation. So many of these programs are actually entering into production phase in next few months, in next few years down the line. Apart from that, our own, fully, OEM rockets, and guided, unguided, we are developing, which will also hit it. So this 50% growth will continue to be there for next 3 years. We will be growing like this consistently. Next year, if we are clocking 100%, kind of a doubling the revenues, then I can say, still will continue to grow from there. Another 45 to 50% will continue to grow.
Got it. Well, we wish you all the best for that. Lovely talking to you, sir, and thank you so much for taking the time out. All the best.
Thank you, Neeraj. Happy New Year to all of you and all the financial fraternity.
Thank you to you and yours as well. Much appreciate. Okay, a charged up conversation with Apollo Micro and JSW Energy is charged up as a stock. Around 6 or 7% gains as we speak. This is because, or 5% gain. This is as the company signed a definitive agreement to acquire O2 Power. This acquisition is said to be the largest acquisition since inception. We spoke to the joint MD and CEO Sharad Mahindra about the benefits from the synergy and the benefits of the synergy of this acquisition. Here out a slice of that conversation.
See, yes, this is a very significant milestone in our journey of growth journey, and this is a very, very high quality asset. We have evaluated this asset on various parameters. Two of the benchmarks which are must for us for any opportunity which keeps coming in the market, the two tick boxes, the benchmark returns of mid to high teen IRRs, and also the build versus buy. So on these two parameters, this has been a very, very attractive value accretive acquisition we have found. Because if we see in terms of if we have to build this entire asset at maybe the total portfolio size is 4.7 gigawatt, and with almost 63% solar and 27% wind, so 37% wind. When we evaluate solar, if I have to build, we all know a very reasonably aggressive evaluation of 4.25 crores per megawatt, a build cost, and wind, we all know the industry 8 to 8.5 crores per megawatt, and we multiply with the capacities. We have found this to be very, very highly value accretive and a solar dominated portfolio with a blended tariff of 3.37 rupees per unit. is a very, very attractive asset. And also apart from this, few things which value, this is a very high quality, nicely built quality assets when our teams did the due diligence in last few months. And as we all know that countries, the kind of energy transition which is happening and the capacity additions which are happening, skill set is also going to play a very, very important right skill set availability. So the highly skilled manpower, workforce of O2 is what we are also getting, and now they are a part of JSW family, which will also help us in our growth journey of JSW Energy going forward, apart from the completion of 4.7 gigawatt. And just to give you an overview of this portfolio, 4.7, by June 25, 2.3 gigawatt of this portfolio will be fully operational. Part is already operational. So this will also help us in our capacity addition plan also.
The acquisition also takes the company's locked-in generation capacity to around 25 gigawatts. How do you now see capacity addition taking place? Could we see the annual capacity increasing higher than the previous targets?
Yeah, I'll just give you an overview that, as you rightly said, we had said maybe about 2.5 years back that 20 gigawatt by 2030 and 10 gigawatt by March 25 without any inorganic opportunities. We are on track to reach this close to 10 gigawatt by March 25. And O2 platform by June 25 of 2.3 gigawatt. And also there is another process in which we have been IBC process for a thermal asset where we have got we have been declared the successful bidder. The process is on. Maybe LOI and the completion of the deal may take few months. So with that, by June 25, with both the O2 already done, if that also happens, and 10 gigawatt of greenfield capacity. So we will be, that portfolio of thermal is 1.8 gigawatt. So we will be definitely in excess of 13 to 14 gigawatt. This is the number we are seeing by June 25. So we are definitely far ahead of 10 gigawatt by March 25. So yes, now with the pipeline of another 9.2 gigawatt with from JSW Energy portfolio and O2 also over and above 2.3, another 2.4 gigawatt. So the pipeline takes us to 24-25 gigawatt, and there are signed PPAs which have a timeline of 18 to 24 months for completion beyond 10 gigawatt. So definitely we will be accelerating our growth, and now we will be sitting on the desk and drawing board to work on our strategy 3.0 for FY30, and maybe soon we will be coming out with our numbers. We are working on that, definitely.
Got it, Mr. Mahinder. You know, the acquisition value is also for a large sum, largely around 12,460 crores. How will the company be funding this? Could we see an uptick in the debt rising from current levels as well?
See, just to give you an idea that still the deal is to be consumed in 5 months timeline, which is there from the signing of the SPA, but we are quite confident that it will happen earlier. So numbers are going to be dynamic. Specific for 12,468 crore, the value is that because the part of net working capital, which is a dynamic number, when we close, we will be ready with the exact numbers. But yes, we have to remember in terms of funding that what we have, you may recall that in April 24, we raised a QIP of 5,000 crore, successful raise of funds we did through that route. And in September closing, H1 closing, we have reported a free cash of 5,700 crores. So we are very, very comfortable with it will be a mix of internal accruals, plus if we, in case the debt is to be raised, but exact numbers will be coming. In terms of ratio, if you are asking debt to EBITDA ratios, what we have declared of 4.1 end of H1, and if we remove the construction work in progress, which will give us the returns once the capacity gets commissioned, it was a very comfortable number of 2.2. Even if we talk of net debt to EBITDA, including CWIP, the industry average is 5.5 to 6, wherein the rating agencies are comfortable. We were at 4.1 in September. So all these gives us a lot of cushion and headroom to accelerate our growth, and our strong balance sheet strongly supports that.
Well, that was another acquisition, but I also want to touch upon other points. There's also been news flow of the company entering the wind turbine blade manufacturing sector. Could you maybe give us a comment or insight on this development?
Yes. See, we have announced earlier that we signed the technology license agreement with SANY China. I am happy to tell that the manufacturing facilities in India has started by SANY, and the rollout for our own captive requirements from that facility by SANY will start sometime maybe between January and February, maybe a month or two from now. So, and that is a 4 megawatt platform, which is very, very helpful in terms of the per unit cost of construction and very helpful with the Indian conditions. So that is one. Another part where we are going into manufacturing is the wind turbine blade manufacturing. Blade is a huge cost if we have to import because logistics plays a very, very high cost. So we are setting up our manufacturing plant under the technology license agreement has already been signed with SANY. So we are setting up our plant in maybe 9 to 12 months time. This blade plant manufacturing for our own captive requirement will start, which will significantly help us in reducing our cost of per megawatt construction cost.
You know, you mentioned cost. How will it help cost from the wind energy side, and how much will the company be investing in this venture?
See, cost perspective is very dynamic because this is a location where internal movement of the blade also happens. So we are in the process of deciding whether one plant or two plants we put nearer to the geographies. Those are dynamic numbers we are working on. But definitely, it will be a significant reduction in the cost, project cost.
I also want to talk about, JSW Energy's foray into energy storage, which has been significant, 16.2 gigawatts of locked-in capacity. What kind of revenues could one expect from this area? And also, could you give us, the update of the 1 gigawatt battery energy project in June, the 12 gigawatt pumped hydro project due in around 48 months? How will the capacity addition in energy storage take place for the company?
Yeah. See, I'll just come to first battery energy storage. The project is on track in terms of the construction, which is Asia's largest capacity at a single location of 1 gigawatt hour. We will be commissioning that in June. And part of the capacity is already tied up. Part is capacity as the project was designed is merchant, which will help us in evening peak hours when the demand is more, at times the supplies are a constraint. So we expect that to commission the full capacity by June 25. Work is on full swing. Apart from that, as you said, 12 gigawatt hour of pump storage. Yes, for that we have already signed the power purchase agreement, and now maybe in a month we expect the construction work on the site to start, because we have been working on the site for last more than a year to be ready. So it is a shovel-ready project now where we are starting. Over and above that, we have recently received the letter of award from UP also for a 9.6 gigawatt hour of pump storage project, on which also the site, our team has been working for more than a year. So that PPA we expect to be signed very soon. So the total locked-in capacity is 12 plus close to 10 gigawatt plus battery energy storage. So we are close to at about 22 to 23 gigawatt hour logged in capacity, as we have declared in our 2.5 years back that 40 gigawatt hour storage by FY30. So we are well on track on those lines.
Lastly, I want to get a sense of the financial performance. Now, the last 3 years, revenues, EBITDA and margins have shown growth, but profits have remained largely flat on a CAGR basis. So, Mr. Mahendra, what are your expectations in terms of growth in FY25 and FY26, as well as for margin expansion?
The thing is, once the capacity, we have to remember in last 2-3 years, the shift is happening that moving the thermal portfolio percentage in the overall portfolio has been reducing. So, which in fact, in a way is positive, insulates the business from the business dynamics, whether the fuel cost, the coal cost, other things. And this is whatever capacity additions we are now investing is with tied up long-term PPAs with the defined tariffs. So better will be if we see revenue flat, may not carry that meaning, because revenue, once the percentage of renewable energy is there increasing, the revenue, it may not be the right benchmark to compare, because if the coal-related thermal portfolio is reducing, that it will have an impact on the revenue, but more important will be the EBITDA margin and the PAT. We expect going forward with this range, this will definitely be significantly will be improving the EBITDA margins. We will see a large jump in the coming year is what I can say right now.
Lastly, Mr. Mahendra, could you maybe give us a sense on how much the company earns per revenue per megawatt when it comes to wind, solar?
See, we don't normally do that when we see the platform blended tariff. If we take because this is dynamic solar, which area, what is the CUF, what is the energy generation, what is the tariff. But if we take an example of O2 with a 4.7 gigawatt, and you can take a mix of solar and wind, and with the average CUF of maybe 29% or 30% blended this thing, what is the energy generation, and the blended tariff of 3 rupees 37 paisa will give a significant idea of the revenue. But we have to keep in mind that the positive upsides which are there in the platform is that we at JSW have been doing our self O&M with a very, very highly qualified team. So, and then the O&M optimization overall, and the synergy is that 7 states where O2 platform is present. And out of that 5 states, already JSW Energy has a strong presence. So a lot of synergy will come in optimizing these costs and bringing the upsides in the EBITDA margin and the PAT.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
whole day passes like a blur. The news just whizzes past. And you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Log Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in?
Back with India Market Open right here on NDTV Profit. In minutes from now, of course, we'll have the new listings as well, and therefore that's something that you might want to watch out for. But I want to mark a few stocks. So firstly, Garuda Construction and Engineering, the stock started off absolutely flat. We spoke about it in the morning that Utpal Sheth has bought into it, and I think that is what now the street has realized. Trust Mutual Fund also, I think, bought into it, but Utpal Sheth's name attached to it, the stock has zoomed in trade. So 6.5%, 7% up for Garuda Constructions. Watch out for that one. Jacob and Reliance Industrial Infra. Now, this is a sentiment thing, but because there is a first commercial flight testing happening at the Navi Mumbai International Airport, companies which presumably have land bank around the Panvel region will probably benefit, and which is what, not Reliance Infra but Reliance Industrial Infra, RIIL and Jacob. Those are the two that have also perked up a little bit in trade. There is strength in Anu Pharma, 8% higher. There is strength in the Medical, about 6.5%, 7% higher. Navkar Corp is now at 172 rupees, and if we can pull up the last 1 month chart of Navkar Corp, it's 6% higher right now. The last 1 month, Navkar Corp is up about 15% in trade. Very strong show by this one too. So good going. Inox Green is up about 6% as well. So pretty strong showing for that one too. Now the new listings, and remember, as per the subscription numbers, Senores, Ventive and Carraro, and both Ventive and Senores have decent listing prices. We should try and pull up those stocks for you. Carraro is down about 7%, Ventive about 12% higher, Senores about 54% higher. No surprise here on the listing prices per se. The question only is, can any of these inch up? Speaking of which, we should try and see if Translate Lighting or Dam Capital, and what is the kind of moves that those are making today. These are stocks that listed in Friday's session, and wonder what the new listings are up to, or those listings are up to as well. So should get both Dam Capital and Translate Lighting as well. Dam is down about 5% in trade. The 1 month chart is in no point. Translate is about 2.5%. So interesting moves there on some of these stocks, the Agam. Well, okay, so that's the new kids on the block. Now, Vodafone Idea is the stock in focus as well, has welcomed the government's move to waive off bank guarantee requirements, admitting that the move will benefit the company. Mihika Johnson with more on this. Mihika.
Thank you, sir. So Vodafone Idea is buzzing. It's up around 3%, and this is after the Department of Telecommunications waived off the bank guarantee requirements for telecom operators. Now, these bank guarantee requirements were required for spectrum auctions before the 2021 reform package. So the bank guarantees have been waived off for 2012, 2014, 15, 16, and 2021 spectrum auctions. When you talk about how this benefits Vodafone Idea, well, it makes their liquidity for capex higher. So they had around 24,800 crores obligated to be provided for the bank guarantees for the spectrum. So now the waiver will ease the financial burden on the telecom operator. It also highlights the government support to the telecom industry and network expansion, and will allow telecom operators, this 24,800 crores could be used to invest in more 4G, 5G network rollout across India. But it's key to note that not all is waived off. There's a one-time partial bank guarantee for the 2015 auction that still remains. However, the company has stated in its press note that discussions are ongoing to finalize the final amount of the partial bank guarantee shortfall.
Okay, Mika, thanks for that. So that's as far as Vodafone Idea goes. Now, as 2024 comes to a close, Indian economy has seen its share of highs and lows. From inflation and interest rate battles to signs of recovery and growth, the year has been eventful for markets, industries, and consumers alike. It's a comprehensive look at how the economy shaped up this year and what lies ahead.
How was your 2024? Well, for the Indian economy, the year might have started off on a solid note, but it did end on a little bit of a sour note. GDP growth in the January-March quarter of 2024 had come in at 7.8% and eventually fell to a 7-quarter low of 5.4% by the July-September quarter. Now, alongside slower growth in industrial GVA, which was led by manufacturing, we also saw slowing in private consumption and capex from the previous quarter. Now, looking ahead, robust Kharif food grain production, good Rabi prospects, the festive and the wedding season, and a pickup in government capex are all expected to provide some support to economic growth. Still, the RBI did end up having to revise real GDP growth forecast for FY25 to 6.6% from 7.2% it had previously projected. Now, coming to retail inflation, well, food prices continue to remain an Achilles heel for India. In October, in fact, headline inflation rose to the highest print we saw in 2024, above the RBI's tolerance band. It came in at 6.2%, and the consumer food price index had showed double-digit growth of 10.9%. We did see a step down in the next print, but going forward also, food inflation is expected to soften in Q4 FY25 with seasonal easing of vegetable prices, Kharif harvest arrivals, alongside expectations of strong Rabi production. Still, adverse weather events and a rise in international agricultural commodity prices continue to pose upside risks and will have to be closely watched out for. Now, owing to these inflation trends, the benchmark lending rate or the repo rate was on status quo by the Monetary Policy Committee at 6.5%, and this has been followed by growing calls of a rate cut which we may see in 2025. 2024 saw a resurgent dollar and the rupee continuing to breach fresh record lows. Active central bank intervention did ensure low volatility compared to other emerging market currencies, but the rupee is set to see a more volatile 2025. Now, that's because of Donald Trump assuming office and is expected to employ tariff as well as non-tariff barriers to promote US manufacturing and services. One front India did derive comfort on was Brent crude prices having fallen by almost $10 a barrel compared to where we started the year off at. For the next year as well, oil prices may face further downward pressure given the demand-supply dynamics. All in all, it's been a mixed bag for India's economy, and we're still going to be watching out for how the fiscal year ends, be it in terms of where GDP growth settles at or the government's fiscal deficit target. For more on that, stay tuned to NDTV Profit.
With 2025 just around the corner, Jefferies has come up with Greed and Fear report that provides outlook on key sectors. Here's Anushi standing by to give us an update on that one.
Hey, thanks for that, Agam. So, in Jefferies, in their greed and fear note, they've emphasized on certain changes that one should be looking out for. This pertains to both their Asia ex-Japan strategy and also the India long strategy. So, for Asia ex-Japan long-only portfolio, HDFC Bank has been reintroduced again with a 4% of weightage. This 4% weightage investment for that would be led by cuts in some of the other names, that is Macrotech Developers, L&T, ICICI Bank, Axis Bank. This is by 1% each. So this 4% cut in these 4 names would make up for the 4% reintroduction that they planned for HDFC Bank. Siemens Limited is another stock that they've added with a 4% of weight. This is by removing Samsung Electronics and cutting down their weight in SK Hynix by 1%. Coming to the India long-only portfolio, Siemens again added with a 4% of weight here. This they've removed by investment in their AU Small Finance Bank and added 1% weight back in HDFC Bank. This is aided by the cut in Axis Bank weight by around 1%. So this is the overall strategy that Jefferies has pointed out for its Asia ex-Japan long-only portfolio and India long-only portfolio.
Right, Anushi, stay with us. Tell us also what Morgan Stanley has made of Zinka Logistics. I believe the stock has doubled from its listing very recently, but they are underweight.
Right, so Morgan Stanley has initiated a underweight rating, and this is at the target price of 450, which is a 16% downside from the previous trading session's prices. This is after the share price, what it has done post its November 24 listing. It's been up around 105%. So already a strong rally that we've seen in terms of performance. So considering the rally that has happened, they now find the risk to reward ratio unattractive for the company. Other factors which support their underweight thesis include high market share in the core tolling business, but now they see limited opportunity in terms of where the total addressable market is, and thus the limited upside to growth assumptions from these levels. External risk factors also include around their merchant discount rate. So this points to a unclear visibility in terms of medium-term growth and margin projections for the company. Optionality from new services is still in the early monetization phases, so this is yet to be proven as how this would benefit the company going forward. If you do note, Zinka Logistics has built a niche and competitive moats in a large fragmented market, and if their core business, the revenue potential is very strong, around 24% of CAGR that they expect over FY 25 to 27. But considering the kind of price rally that has happened along with the limited growth upsides now that Morgan Stanley sees, they have this underweight rating and a 16% downside is what they expect.
Okay. Well, but the stock is down about 4% in trade today for sure. Thanks a lot for that, Anushi. What is up today is JSW Energy. You heard the management, of course, but for people who are tuning in right now to the channel, here's why JSW Energy is up 5% today. They made an acquisition. Now, O2 Energy. Now, why this is important? Because Motilal Oswal says that, according to them, of course, their math, and their target price is some 810 rupees. No, this is fine. This is what JSW Energy's largest acquisition since inception is fine. There is a Motilal Oswal note, which we've spoken about in the morning, which I want to highlight. Their target price is 810 rupees. And Motilal Oswal says that the deal adds an optionality of 57 odd rupees to JSW's total value. Now, why do they say that? They say that this is because the interest cost, right here. This is what I was referring to. Let's move on from this on to the other lines as well. So Motilal Oswal says that the interest cost for O2 is 43 days, lower than JSW, 8.8% at par with JSW, and the receivable days at 43 days is lower than JSW's receivable days at 68 days. They also go on to say that the whole transaction includes the portfolio of O2 Energy, which is 87% of the portfolio backed by utilities such as SECI, NTPC and SJVN, all of which are blue chip. And the 30% of the CNI portfolio is largely comprising AA companies, AA rated companies or higher. So I think the derivation is that the chances of bad assets or NPAs remain much lower, and hence I think the stock has reacted the way it has. 4.5% off the highs of the day, but still in the green.
Right. Let's also put the spotlight on Ipca Laboratories. Let's pull up the stock firstly and see what it's doing. It is marginally in the green right now, up by around 0.6%. But the reason why we wanted to bring this up is because we have a Motilal Oswal note and they remain positive on this. In fact, they've given it a buy rating and they see an upside of around 21%. We have Varsha back with us to tell us about what this note entails. Varsha, over to you.
Well, yes, Agam. So, Motilal has maintained buy on Ipca Labs with target price of 1,980, implying potential upside of 21%. Let's see the reasons for the same. So, they are anticipating 27% earnings CAGR from FY25 to 27 with 170 basis point margin improvement. And as Ipca is relaunching approved products with stable pricing and filing 15 to 17 new products over the next 2 years, according to Motilal Oswal. Company also plan to file 15 to 17 new products in US over the next 2 years, which is the next leg of growth. One of the reasons why Motilal has maintained buy is the Unichem integration, which will boost margins for the company. EBITDA already improved to 12.4% in Q2 FY25. Company will leverage Unichem's portfolio in Australia, New Zealand, Europe and rest of the world markets. Company is also launching new divisions in dermatology and orthopedics. This is also one of the reasons why we are seeing this 21% upside potential by Motilal Oswal. Lastly, if you see, brokerage is actually anticipated 23% CAGR in exports from FY24 to 27, driven by product filings and EU market expansion. And also companies developing niche pipeline of 8 biosimilars in oncology, ophthalmology and anti-inflationary therapies.
Okay, well, so Ipca Labs is one more that you want to keep in mind as well as per the brokerage note here. Remember, the other thing is while you look at individual pockets and keep a bottom-up portfolio as the key, what is the top-down strategy? What is the broad strategy in a scenario like this? And from somebody who is perched abroad but looks at India as well as the rest of the world. And I think that's the perfect guest to have today. We have Vikas Prasad, Portfolio Manager at MNG Investments, joining us, I presume, all the way from Singapore. Vikas, is that where you are at currently?
Hi, good morning. Yes, concluding the year at home. I'm here.
Okay, fair call. Vikas, good having you. Thanks so much for joining in. Neeraj here. Let's start by thinking of how are you looking at 2025 as a year? Is it a year that belongs to a certain set of markets like the US, or could it belong to the emerging markets? And then we'll move on to what within that landscape may or may not look attractive.
It's hard year to year to see or to think which year will belong to which markets. However, what we've seen for 2 decades now is that India and the US have led equity returns around the world. I think on a prospective 3, 4, 5 year view, that should remain the case. Now in the US in particular, we've seen a material re-rating and we've seen a very narrow rally. What's healthier about India is that heading into the end of the year, we've seen a bit of a de-rating. And part of that was justified. The September quarter earnings were not as good as expectations. But when we look forward, it's normal to reflect. Every year for the past few years, I've gone through the same exercise. Is this the year the Nifty streak ends? Is this the year India disappoints on equity returns? In September, I thought the probability was higher that would happen, but the case for Indian equities still looks good in a regional context, in an emerging market context. Also, our view remains that as an equity market, India no longer is an emerging market. We think it has emerged. How much more does it need to emerge? $5 trillion market cap, massive economy, rapidly growing, busiest IPO market in the world. And so I think that from here, the case for Indian equities remains pretty constructive, and we are positioned accordingly. We are fully deployed in India. We've been active on the ECM front, but we have a lot of core holdings as well that continue to perform well.
Because what are you making of Trump 2.0? What does it mean for American markets? And what sort of an implication can it have for Indian markets? Because from what we understand is that there could be some inflation based on, in anticipation of the policies that he has in store. We've already started seeing yields harden, the US 10-year yield specifically. What does that mean for the US markets? And do you think that there could be some fund flows coming back to India based on that?
So this is an interesting question, and let's look at it in parallel with the China and US dynamic and what that implies for Chinese equities also. That's another market where we are constructive. That's another market where we have allocated more capital this year. The difference is in 2016, when Trump 1.0 kicked off, Chinese companies were not really ready for what came. They are now much smaller, leaner, better allocators of capital. And the relationship between Xi Jinping and Trump might evolve. Xi Jinping was invited to Trump's inauguration. Now, conversely, you look at India, and Trump 1.0 was better than Trump 2.0 might be. That's what we're prepared for. We are widening out our earnings scenarios. We're widening out the tariff and revenue growth scenarios for companies that are particularly exposed to the new policies that will come out of the White House. So we might see a difference. Chinese companies might be better prepared this time around. Indian companies might have some surprises in store for them. Now, India broadly is very important to the US, and so that will be taken into consideration as the new administration crafts policies. But you're right, this is the right thing to be focused on, and I suspect that there will be some surprises along the way. In 2025, we've already seen that. If you look at the automotive parts companies that have facilities in Mexico, as an example, we've seen some volatility in those share prices. We've seen some deratings in those share prices. That probably continues at least for the first half of the year.
Okay, because the other aspect is that there are large sectors in India which haven't quite done as well as their fundamental performance has been, particularly banks, for example, right? Because there's this incessant FI selling that has been continuous in Indian markets for the last 6-7 months. So there is a technical element to it as well. And you can sense it because fundamentally the performance hasn't been that bad, if you will, or has been reasonably okay in certain cases. Could we see that selling ebb at some point of time if indeed there is no rate hike trajectory in the US, or if rates stay constant, if you will, and if the dollar strength were to just kind of cool off a little bit, if you will? And can that help fundamentals meet valuations in case of banks? A lot of banks, private sector banks, available 1.5 times FY26, FY27 book valuations as the case may be. Is this attractive enough, or would you rather fish in different ponds?
Well, there's a few things to unpack here. First, I agree with you that if you look at financials, which is a very broad universe, as you know, if we focus on private sector banks, we feel that there are opportunities there. That's the one part of that broader financials area that we are overweight. If you look at this year and the names that have underperformed materially, hydrocarbons, those companies, especially in the second half of the year, the consumer staples companies throughout the year, but especially post-elections, that initial bump that we saw when people were assuming that there might be some more socialist policies. In Q4, we've seen that as the tide has gone out post-earnings, these companies have not been prepared for that. Now, when you come to the banks, this is such a large, diverse universe. We remain zero-weight or materially underweight the microfinance institutions, many of the consumer finance names. We're beginning to see some stresses there that weren't there at the beginning of the year. Now, microfinance has been dealing with issues all year long. Then you layer on top of that the regulatory pressures, and we feel that you have to be even more selective than you are in other spaces. A, because there's so many more choices, but B, because the earnings outlook varies a great deal from bank to bank, from sector to sector within financials. But private sector banks here, I agree there's an opportunity. If you remember what happened to the largest private sector bank in Q1, material underperformance, but look at it since then. And people who kept the faith there in the management team, in the broader outlook, and just looked at the valuation, realized that there was a disconnect here. It has changed in this 40% or so rally from the lows, but its peers continue to be positioned well, we think.
Vikas, tell us about emerging ideas that you guys are spotting or you guys are doing work around for now when it comes to India.
Well, so we start with cooling. If you look at the air conditioning names, this is a sector where we increased our positioning materially in the first half of the year. And as we head into the end of the year and we look at next year and you look at names that have outperformed, it's natural to think that maybe this is the time to take profits. But if you look on our time horizon, 3, 5, 7 years out and beyond, India cannot achieve the economic goals that it has. The people cannot achieve the productivity levels that they need without massive deployment and penetration of industrial and home-based cooling. So the air conditioners are a natural place to start. But then if you look at the derivatives of that, the companies that are manufacturing these, the outsourced manufacturers, there are opportunities there. Now, those companies have re-rated even more than the air conditioner OEMs, but we continue to like that. We continue to be overweight that space, even here, despite the performance. Again, this is a very long-term theme. If you're looking for long-term investments, you will find them here. So that's one. Before I get to the rest, I'll also say, what have we not changed about what we don't like? Consumer staples, I mentioned earlier. We own fewer consumer staples names today, heading into 2025, than we ever have. And most of those are zero weights. They're not even underweights. And so we have a very selective exposure to that sector. I don't see that changing anytime. If you broaden out the consumer exposure, paints, yes, they've underperformed, but the earnings cuts have been material. And for the first time, we've seen material deratings rather than a re-rating, or at least holding the multiple, because what the market is implying, or what the current share prices are implying, is that there's more pain to come. Now, to come back to what we do like, the auto derivatives, auto parts, that still seems interesting. Hospital, life sciences, healthcare broadly defined, we still like that. Pharma has done very, very well for 2 consecutive years. Hospitals have done very well for 2 consecutive years. Again, doing your homework, being selective, still yields opportunities there. I'll mention one last thing, which is exposure to the luxury spending theme. When I moved to Asia 20 years ago, in 2005, everything was all about the bottom of the pyramid. Harvard was writing case studies about small little sachets and the penetration and distribution. We've seen that narrative invert, and we still see a lot of opportunities heading into the end of the year and into 2025 at the very top of the pyramid. And that's where our portfolio is allocated as well. I'm happy to go into some more detail, or we can talk about other sectors as well.
Some detail is welcome, Vikas, there. And then we'll talk about the other sectors too. Just trying to couple in this point that when you are looking at taking positions now in this market, are you elongating the time frames for the returns? Because hitherto the market was buying, and people met their internal targets way earlier because of the gush of liquidity. Do people need to reallocate or rethink their timelines?
Yes. Okay. So this is a great question. But when we invest in a company, the intention is that our holding period will be in perpetuity, that it will be indefinite. However, when we evaluate our portfolios, we realize and we recognize that we buy our portfolios every day. We are underwriting our portfolio every day. So we are focused on prospective returns each morning when the market opens, each day when it closes. And that calls for some reallocation of capital. When companies have done as well as they have, when you've seen the inflow of new opportunities to the extent that we have. 5 years ago, I was just looking at this over the weekend. In 2020, we had maybe 30, 40 IPOs. This year, we've had over 300. I would be surprised if we materially exceed that number next year. But if you look at the investable universe in India, it has now grown to 6,000 companies. There are about 1,600 companies with a market cap over $100 million now. So when you have so many new opportunities and you have material outperformance of India relative to other markets, and then within that, the leaders, the breadth that we've seen and the material outperformance of leaders in their sectors, then yes, it calls for a reallocation of capital. I mentioned a couple of themes earlier that we are not taking profits from. In fact, we've added in Q4, cooling being one of them. But yes, we don't hold with a particular time horizon. It's just indefinite. But because we're focused on prospective returns in this market, we probably have traded a little bit more this year, or last 18 months, I would say, than we have in previous years.
Okay. Because did I hear you, just last question from mine, did I hear you say hospitality? And I'm just wondering, the new listing today, ITC hotels business getting demerged, a lot of builders thinking of a hospitality portfolio of their own, Prestige, Oberoi, etc., and the listed players talking about very strong growth. Is this a sector that is good to keep in the portfolio?
Yes, I had mentioned hospitals, but I'm glad you mentioned hospitality because that is in our portfolio also. There are some benchmark names that we hold. There is some off-benchmark exposure as well. And this is yet another space like hospitals, actually, where you've seen a lot more choice on offer in the past 2-3 years through the public market listings that we've seen. compared to years before. Yes, this is also part of the Lux theme that I mentioned. I talked about the obvious, or there's the obvious area to talk about, which is high-end real estate. But hospitals are a part of that. Hospitality is a part of that. Airlines are a part of that. There are many ways to express this view that wealth is becoming more concentrated. And what the implications are for society, that's a different and longer conversation. But when it comes to investing opportunities, we continue to think that this is not a fad. This K-shaped recovery that we saw coming out of COVID has become indeed a K-shaped economy. And we continue to see opportunities there, and hospitality is a key part of that.
Vikas, we leave it at that. Thank you so much for joining us and giving us your perspective on Indian markets, how things could potentially pan out in all the stocks that you are looking towards and interested in, and of course those that you look less favorably towards. Well, on that note, it's a wrap on this edition of India Markets Open. Up next is Ask Profit. Don't go anywhere. Back in just a bit. Stay tuned in.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. We'll take you through the next 1 hour of trade. Now, of course, this show is geared towards getting you answers to all of your stock-related questions, and to that end, we've got two options available for you. You can either call us on the number that will soon be on your screen, or you can WhatsApp us on the number that you just saw. Let's take you through how the markets are doing towards the end of this year, and it's very range bound at this juncture. Taking cues from overseas, you had, of course, a poor close, if you can call it that, in the US over the course of Friday, and it was thin trading that you saw there. That seems to be the case in the Indian equity markets as well. We have hovered in a range, all negative at this juncture, but then we're inching towards Friday's close as we speak right now on the benchmark Nifty 50, 23,800 on the ticker right now. Mid-cap index up about 0.2% as we speak, and the small cap index down about 0.2% or thereabouts. So very tight, very narrow ranges, and I won't be surprised to see the volume picture similar to what you have seen in certain international markets. We are, of course, in the last couple of trading sessions of the year, and a lot of people on holiday. Perhaps you're watching from home as well. Let's take a look at a few stocks then, and actually before we do that, let's take a look at the sectoral picture just to give you a sense of what is buzzing in trade today. Not too much to speak of course, just about halfway or thereabouts in terms of the winners and the losers. But what stands out, you have right on top of the screen, you have the healthcare index that's doing reasonably well. You have pharma that's up and about in trade today. Among the losers, you have auto, which is down about 0.75% or so, and you have the IT index, which is losing about 0.25% or thereabouts. Quickly take a look at the contribution on the Nifty 50 just to give you a sense of what's moving the needle in trade today. And you have the likes of ICICI Bank, Adani Enterprises. Couple of interesting notes, by the way, on Adani Enterprises, talking about a significant upside. You have Sun Pharma, which is up and about, and you have Axis Bank. Adani Ports also gaining ground. Among the losers, you have Infosys from the IT pack that is losing down. And you have Trent, Mahindra and Mahindra, Bajaj Auto, Maruti Suzuki. So more or less reflecting the sectoral picture that we just displayed to you, and that is reflective in the contributors of the Nifty 50 as well. New listings today, why don't we pull all three of them up? Carraro India is one, Synoris Pharma is the other, and you also have Ventive. Ventive and Synoris doing particularly well. We will soon have the management of Carraro India, which is not having the best listing. We're joined at the start by Saurabh Jain as well as Ajit Mishra. Gentlemen, thanks so much for taking the time, and as always, compliments of the season heading into the last couple of days. Very quickly, I'll come to you first, Ajit, just to give us a sense of how the markets are as you're looking at it on the charts. Volumes not too much to speak of.
Yeah, good morning, Alex, and season's greetings to you and all the viewers. So yes, the last week was a week of consolidation, wherein we saw that index continue to defend the long-term averages, 200 days of exponential moving average. And today also we are seeing a similar kind of a day, wherein after the initial downtick, we are seeing some rebound from that area. So in a way, it's time-wise, correction after this sharp decline, and 23,700 LX is the make or break area for the Nifty. So if we fail to hold this area, definitely we expect Nifty might make an attempt to retest the November month low close to around 23, 250, 260 zone. So as of now, bears are still under control comparatively, considering that the recent attempt of recovery towards 23,870 and 24,000 zone, we saw that the selling pressure emerged on every uptick. So positionally, the tone is negative. Intraday or for a day or two, it's sideways.
Okay, all right. So that's the perspective of the benchmark. I told you we'd get you the management of Carraro India. In fact, let's listen in to some of what they had to say. It's a muted debut for them on Dalal Street.
This is an offer for sale, and it's a very, very big milestone that Carraro India has reached in the last 3 decades. OFS is mainly because the promoters from Italy have invested big amount in India in the last 25 years, and it's natural that they would expect some return from their investments in India. They've been very patient. They've had the perseverance to believe in the Indian story. And we are very happy that we have been growing together with the Indian economy. And the future for us looks very bright because we are in the sweet spot of agriculture and construction equipment vehicles in India. We are providing the technology that is required for the farm mechanization and better vehicle equipments for the construction industry in terms of safety, in terms of efficiency. This is what India needs. We need farm mechanization, farm efficiency for our food security. We need better vehicles which are scientifically designed to meet our construction equipment industry. And these two are booming in India. And we are very happy that we are in the sweet spot supporting the Indian industry with the technology that is required.
All right. So that gives you a little bit of perspective on what the company does. Incidentally, if you've got questions about that, if you bought into the IPO and you're seeing a bit of a loss on the screen, then if you want to know what to do, then you can call us or you can message us. We've got our first caller of the day. We've got Raj calling in from Hyderabad. Good morning, Raj. I certainly have heard your name. And how can we help you today?
Good morning, Alex. Wish you advance Happy New Year.
Thank you so much. Wish you the same.
Yeah. So I have Engineers India share.
Okay, Engineers India.
I bought it 221.
Okay.
And now I'm in loss only. So I just want to know whether I can hold or exit.
Yeah. So it's come off the 52-week high. Certainly, that was close to 290 levels. When did you buy this, Raj? Can you tell us?
6 months ago.
6 months ago, yeah. So it's not too, and it dropped pretty quickly after that. I think you must have been trying to catch the bottom. Was that the attempt that you had?
Yeah. So actually, I'm very much interested in this because they are into different domains. Consulting, they are into designing, they are into procurement.
So when you bought for the long term, Raj?
Yeah, I bought it for 1 year origin.
1 year or more, right?
Yeah, 1 year or more, correct.
Okay, so let me go across for the first time today to Saurabh, just to give you some perspective on Engineers India. 900 shares bought at levels of 221, slightly elevated considering that the share price has dropped quite precipitously from that point. What do you make of the company? Would you hold on, Saurabh?
Hi, good morning, Alex. Thank you for having me on the show. See, the company primarily gives services to the oil and gas sector. Now, what is happening in the sector with the oil prices dipping, and the outlook is that the demand for the oil will cool off. That is why we are seeing pressure in the oil prices. Now, what happens when the oil prices are in the pressure, the activity usually cools down. For the company, it's like Engineers India, and that is why we are seeing pressure in the stock. And if you look at the numbers, the September quarter's number, there is a quite decent amount of pressure on both the revenue and the profitability front. The profits dropped from 100 crore to 76 crore, and there is a drop in the revenue of about 100 crores. So I expect this pressure to continue. I don't expect any kind of upside in the business or in the stock price. So my advice would be better to exit from the stock.
Better to exit is the view, Raj. Hopefully that helps you. Let's take the next question, and we've got one on a recent listing, International Gemological Institute of India, which has had a pretty decent run since listing. It's up about 19% from that point, or close to 20%. We've got a viewer who has not told us his name, who's so Ajayan, who's bought 1,000 shares, and I do not know the buy price, but he's wondering whether to hold or exit at this point. Saurabh, any view on this? IGI, I found interestingly that it also looks at certification of lab grown, or it has a portion of its business that's oriented towards lab grown diamonds, which I think is all the rage right now.
Right, Alex. The company do not only do certification for the natural diamonds, but also on the lab-grown diamond side. Now, the case is there is a kind of a 10-12% growth in the CAGR growth in the natural diamonds, and there is a significant amount of growth which is coming into the lab-grown diamonds space. While this space is small, but I think there is very much for the company to go in terms of business. So for the long term, I feel that it is a good company to hold on. This is the only one of its kind company which is on the listed on the bourses. So my sense is for the long term, it's a hold.
All right, so we've got the next question on SMS Pharma. I'm just trying to pull up the chart, and this is a question, in fact, from. All right, let me just try and pull this up. Okay, we've got Bharat who's asked this question. Okay, sorry, say that again. Sarath. All right. Yeah, so in case you were wondering, that was me trying to get my team to tell the viewer's name. When you're sending us a message, please tell us your name because it becomes easier for me to take those questions. And SMS Pharma, 400 shares bought at 208 rupees per share. The 6-month view is being sought. Ajit, on the charts, how does it look?
So Alex, in fact, if you see that in the recent market correction, pharma and defensive, they are doing pretty well, the healthcare space. But SMS, on the other hand, is still struggling below its major averages. So indications are in the favor that we might see some rebound or recovery due to the oversold position. But comparatively, it's a weaker structure, and since he has bought it at the lower end, means close to around 208, and he's still in the profits, I would recommend him to switch the position to Glenmark, Sun Pharma, or Lupin from SMS.
All right, so that's the perspective on SMS Pharma. We've got Preetham from Bengaluru who's asking about Hyundai Motor, bought 90 shares at a price of 1,813. And this is a stock that has not done incredibly well since listing. It is trading below the buy price at this juncture and below 1,800 for that matter, up about 1/3% in trade today. Is down about 8.3 as you can see from the listing day. Sort of on the fundamentals, would you hold on to this?
Fundamentally, if you look at the automobile sector earlier, there was an expectation that the car sales will grow in the high single digit. But after the first half and the recent numbers, it is quite evident that the growth will be sub 5% only. So that is for the whole industry, and that is why we are seeing pressure coming in the Hyundai India also. Hyundai Motors. The SUV segment is growing, but yes, there is a good amount of pressure on the other cars, the other segments. So, in my sense, I think it is better to take money off the table. It is. I think one should wait while things get settled down. After the COVID, we saw a good amount of double-digit growth coming in the automobiles companies growth. But now I think it is actually tapering off. So my sense is better to get out.
All right, we've got several questions on the fundamentals. I'm going to try and take a question on the technicals as well. And we've got a couple of questions, in fact, one from Karthik, another from Nick about Reliance Industries. Karthik is holding 20 shares at an average price of 1,426. Should he add more at the current juncture? It's not trading too far, Ajit, from the 52-week low, which is around that 1,200 mark. It's trading at just above at 1,219 or thereabouts. Would you buy more at this juncture or wait?
So Alex, first a disclosure that we have recommended to our clients to invest in Reliance Industries of late, and we are eyeing a new high in next 12 to 14 months. And yes, the stock looks extremely oversold from the short-term trading perspective also. We have multiple supports around this 1150, 1170 zone. So we expect maybe time-wise, we may see further correction for a week or two, but eventually we expect the stock to recover strongly. 1270, 1320 is going to be the first area of hurdle, and then 1440 and the new high. So it's going to be a gradual journey, but yes, you can add if your time horizon is over a year.
Okay, add if your time horizon is over a year on Reliance Industries, one of the underperformers on the benchmark Nifty 50 this year, has had quite a torrid time since August of this year, in fact. We've got A. Mohan calling us from Telangana. Morning, Mohan. How can we help you today?
Thank you. Oh, very nice, very nice. How are you, sir?
Very well, sir. How are you?
Okay, very nice, sir. Doing well.
Okay, how can we help you today?
Sir, I am having one query that I possessed 200 Vedanta shares.
Okay.
So now it is going to demerger the metals, no?
Yes.
Yeah, so that's why. So I bought it at the rate of 521. So shall I keep it or sell or remain up to that this demerger?
Understood. So you bought at 521. You want to know what the implications are for you, the shareholder, on account of this demerger that is planned. It's actually going to break into multiple companies. There's of course going to be Vedanta Limited, there's going to be Vedanta Aluminium Metal, Vedanta Oil and Gas, Vedanta Iron and Steel, and Vedanta Power. And it's going to split into 5 companies. December 20th was a proposed demerger scheme. These are revisions that were proposed on that scheme. It has decided, of course, to retain its base metals company within Vedanta Limited. So a question to Saurabh. Saurabh, of course, you're aware of all of this in terms of the developments that have taken place. What is the advice to people that are currently holding Vedanta and maybe those that are contemplating buying into the company? A. Mohan, who's just called us, has bought at levels of 521, so he's lost a little bit of ground. Should he hold on?
Normally what happens when such demerger is announced, normally value unlocking happens for the shareholders because different businesses get settled at the different valuation. But considering the fact that the global climate is not looking very good from the China perspective, also the stimulus which was expected and the growth which was expected is actually not happening. So that is putting a lot of pressure on all the commodity prices. So in that sense, if I look at the what is happening in the global climate, so in that sense, I would not recommend to put money on the metal stocks. If you want to invest for the long term, this demerger will surely benefit you, but you have to have investment horizon of more than 2-3 years.
All right, hold on. So let me clarify. You're saying if you have a long enough time frame, you hold on?
Yeah, I'm saying if you have a time horizon of 2 to 3 years, then you stay put. Otherwise, I think it is better to get off.
Okay. And by the way, Mohan, you're going to receive 1 share each in the newly formed companies for every 1 share held in Vedanta Limited currently. That is the scheme of demerger that has been announced by the company. We've got our next caller, Rajiv Kumar, who's calling us from Trivandrum. Rajiv, good morning, and how can we help you today?
Good morning, good morning. I'm holding, I bought 140 shares of Shukra Pharma.
Okay.
At the rate 62.33.
Okay. I see that this is a BSE listed company. How did you hear about this, Rajiv?
Yeah, it is BSE listed.
Yeah, how did you hear about this?
It accidentally came into my radar.
Okay.
Yeah.
Accidentally, you're saying that it accidentally came into your radar?
Yeah, it is an accident.
Okay. How did this accident take place?
I bought it within 6 months.
Within 6 months, okay. So you were looking at the screen one day and you saw this company, Shukra Pharmaceuticals. It sounded like a good company to invest in and you bought. Is that it?
Yeah.
It's worked out very well for you, Rajiv. You're making double the amount that you invested in.
So can I hold or sell that?
That's an interest. Do you need the money right now, Rajiv?
Yeah.
Do you need the money right now?
No.
You don't
I can hold up to 2 years.
Okay.
No.
Okay. All right. So it's a good problem to have. Ajit, no sellers in the stock seemingly right now. It's up 5% as we speak at close to 130. Is making a decent profit. Should he hold is a question. I hope that you have information on the stock.
So Alex, usually, such kind of stocks usually doesn't come on my radar, but and especially for this stock, if you'll see the price action last several years, it moves almost like, in a very volatile manner, means multiple occasions you will see that the stock, inching towards 200 plus zone and then again slipping towards 20, 40, 45, 60 zone. So fortunately, he bought it at the lower end of this, range, and now the stock has been inching higher. So my recommendation is, since we are not sure of this stock, considering that they usually trade in circuit filter, of late we have started seeing some volumes, decent volumes rather. So last day's low should be his stop loss, and he can continue to trail his stop losses on rise. So maybe close to around 160, 170 area, in case if it gets the opportunity. Definitely is a good price to lock in profit and exit.
Okay. All right. make sure you read up about the company as well. And the advice, of course, is to exit. And you're making quite a bit of money, so it shouldn't be a problem. Always a good thing to exit when you have more money that gets into your bank at the end of that trade. The next question is on Swiggy, and we've got Teja from Hyderabad who's asking this. He's bought 100 shares at a price of 560, losing a little bit of ground. The stock is currently, just about there, right? 559 or thereabouts. In fact, when he posted this yesterday, and that was the closing price at that point, right? So it's gained a bit in trade today as well. Sort of on the fundamentals, would you hold on to this? Would you add more at this juncture?
Fundamentally, I think the business is, people are investing in Swiggy, looking at the Zomato, what has happened in the Zomato. The space is growing. The online delivery business is getting profitable at the EBITDA level, also for the Swiggy, and for the Zomato now it is a profitable business. So in that sense, I think there is a good amount of market which is left for them to grow. So in that sense, I think it can be a good hold for the long term.
Okay, so it can be but would you add more at this point?
I think it is better to add on declines.
Add on declines. All right, add on declines is the call on Swiggy. Hopefully that helps you. Ramesh from Bengaluru is calling us on an interesting stock in the railway space. Ramesh, morning. What stock? RVNL is the name of the stock that you want to know about. And you bought at levels of 567, elevated levels. Why did you buy at that level?
No, it was like, the 52-week high was around 647, right?
Yes.
So I thought it has dipped a bit and then it's a good thing to buy.
Okay, but did you buy based on the fundamentals or did you buy based on the price action?
No, I bought it based on the price, thing.
Okay, and so you were looking therefore to hold for a lesser amount of time, possibly less than a year, is that right?
Yeah, I was always a short-term player.
Short-term player, okay. And so therefore, if you were to be asked to extend your time horizon, would you be okay with that, Ramesh?
Yeah, that's what I have to do now, now, because I can't, right now, possibly I'm around 2.5 lakhs down.
Yes, in fact, it's more than that. It's 2.85, apologies.
Yeah, 2.85, something like that.
Yeah.
So I just don't want to make
a loss. Yeah. So let me also clarify. Do you have a long-term portfolio of stocks as well, Ramesh?
Yeah, I do have for Eco Energy.
Sure. Okay.
Not Eco. Some Eco Energy related. That one I have.
Yeah.
And I have Delta Corp. And have Hindustan Motors.
Okay.
For long term.
Okay. So generally the advice is to have 15 to 20 stocks in your long-term portfolio and use a portion of that to trade as you've done in RVNL. But let me get you a specific view on RVNL as well. Ajit Mishra, I'm coming to you on this one. On the technicals, would you hold on to this? A significant loss right now.
Yeah, true, Alex. And the picture is not different to what we are seeing in the other PSUs also. Like after brief recovery, again, we are seeing that most of the PSUs name they are struggling. The PSE index is in fact indicating possibility of further cuts in days to come. So RVNL particularly, we are trading at the long-term averages close to around 420 is what we have the major 200 days of exponential moving average placed. Last time also we've recovered from this area. So considering that there's a possibility that the stock might again witness a rebound, I would recommend him maintaining at least stop for partial of its position, if not complete, around 400 levels. In case if it breaks 400, definitely he should liquidate partially position because the stock might then maybe inch toward 350 or maybe lower. So, and in case of recovery, we have multiple resistances to cross, first at 440 and then 460. So as of now, indications are in the favor. There's a possibility that the stock might break this 400 support area and inch toward 350.
Okay, all right. So that's a view on RVNL. Hopefully that answers your question. And my wish for the new year for you is that you recover some of your losses. Let's slip into a very quick break, gentlemen. We'll be back on the other side to take more questions. Viewers, do stay tuned. We'll be back before you know it.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Welcome back. You're watching Ask Profit, a show where we answer all your stock related queries, whether they're fundamental or technical. Viewers who are just tuning in, you can ask all your stock related queries on the number that is flashing on your screen. You can either call us or WhatsApp us. I think we have our next caller patched in. Naveen from Vizag is calling in. Naveen, thanks for calling in. How can we help you?
Hi, good morning. How are you?
Good morning. I'm good. How are you?
I'm fine. Thanks for asking.
Yeah.
So I have 10 shares of HDFC Bank at 1520 level
Okay.
in my long-term portfolio. But now I want to switch it to Indigo Aviation for the long term. So I want to sell off this HDFC Bank and I want to buy the Indigo for more than 5-6 years, I can say. In fact, 10 years also.
Okay.
So just want to view on sort of thing.
Okay. Naveen, I just want to understand, why do you want to do that? Have you studied HDFC Bank as well as Indigo?
So the reason is the potential. I am just saying the market capital of HDFC is currently 14 lakh crore. The ideal potential for it, let's say for double or triple, the possibility is slightly on the lesser than the time horizon that I was looking at. And whereas the Indigo Aviation, considering the growth that we have potential we are seeing, there is a high chance the growth will be on a better side. So that's the reason.
All right. I'll take your question with Saurabh. Saurabh, do you think this is the right strategy to adopt?
Can you please repeat his query because I was not able to listen properly?
Right. So he's saying that he's holding 10 shares of HDFC Bank at 1500 and now he wants to switch to Interglobe Aviation. Is that the right strategy to adopt for a long-term perspective?
See, both the stocks are looking quite good, but if you look on the valuation matrices, HDFC Bank looks quite stronger to me. A lot of the consolidation after the merger has already happened, and banking sector per se is looking good for the next 2-3 years. With respect to the aviation industry, yes, the company is able to garner more share, and there is more traffic. I mean, the tourism sector and the people flying for their various needs is growing up, but on the valuation side, it's a very expensive stock trading at 90 times to book value, and the valuations are very, very on the higher side. So there is nothing much left on the table in terms of the expectation of any kind of growth in the stock price. So I would suggest better to stick with the HDFC Bank and avoid switching.
Stick with HDFC Bank is the call. It's not trading too far away from its all-time highs at this juncture, but still potential. A lot of people have pointed out the potential going forward. Prakash from Chennai has got the next question. What is the strategy that will give the best possible returns? Buying ITC now or post demerger? Incidentally, ITC, the record date for the demerger is the 1st of January and the ex-date is the 6th of January. So if you want as an ITC shareholder to receive shares of the demerged entity, you will have to buy before the 1st of the new year. Saurabh, I'll come to you on the question here. Would you buy just one of the two or both?
I think you can go for any of the case. If you want to have the demerged entity, I think it is better to take position before the date. I think 40% of the business is getting divested, and that 60% will remain with the ITC only. So it's not that hotel full hotel business is getting demerged. So you have to take a call. I mean, you can go both ways.
Okay, all right, you can go both ways, but I mean, it's a buy for you on ITC, right? In general.
In general, it's a buy. It's a portfolio stock.
It's a portfolio stock. All right. Gen Irrigation is the next counter, and we've got a call from Venugopal, who's calling us from Tamil Nadu. He's holding 200 shares at a price of 20 rupees. So it's a 3-bagger for him at least, heading towards being a 4-bagger. Venugopal, congratulations on the acquisition. What were you thinking when you bought it? Hi, can you hear me, Venugopal?
Hello. Yeah, I hear you.
Good morning, and thanks so much for calling us. What was the thinking when you bought Jain Irrigation?
Jain Irrigation, I bought at the range of 20 rupees at the Corona time.
Right.
Actually.
Okay. And what stood out to the... so when you bought the company, something must have struck you, right? You must have thought about why this stock is available at 20 rupees.
Yeah, I bought at the PE levels.
Okay.
According to the PE level.
Right.
PE level at that time it's around 15, I think.
Okay.
That's why I bought the shares.
Okay.
Around 400 shares. But I sold it 200 shares at the level of 40 rupees, I think.
Okay.
Now I'm holding 200 shares. Can I hold or...
And what is the time frame that you have? You've already held from COVID-19, which is quite a while from the point that you bought it. Are you in a hurry to sell, Venugopal?
No, not at the time.
Okay.
Can I add some shares?
Okay, can you add? So Saurabh, I'm going to come to you on the fundamentals because he's bought based on the valuation parameters that he saw at COVID lows, 20 rupees, quite an attractive buy price if you look at the kind of movement that you've seen in the share price. Would you buy more at the current juncture or would you exit at this point?
Recommend to buy, certainly. If you look at the company is unable to make any profits. It's working on a very thin margin, and there is a huge amount of interest outgo. In the latest quarter, there was a negative bottom line. If you look at the promoter holding, it is less than 25-26%, and half of it is pledged. While he has made money, I think I would recommend him to book profits from the table and switch elsewhere.
So switch elsewhere is what Saurabh is saying. So basically it's a sell on Jain Irrigation. We have our next caller, Shweta from Hyderabad is calling in. Shweta, thanks for calling in. How can we help you?
Hi, good morning Mahima and good morning Alex.
Yeah, good morning.
I wish you a very happy new year in advance.
Wishing you the same, Shweta.
Thanks so much, Shweta.
Yeah, my question is regarding Keynes Technology.
Okay.
I don't have any shares. I would like to take the entry. I want to know what is the exact level to take the entry for a 1 year view.
1 year view. So you want a technical view on this, I believe.
Yeah, levels, including the levels and stop loss.
All right. Ajit, I'll come to you on this one. How does Keynes look on charts?
So, it's a steady uptrend that the stock has been experiencing for the last several years. And off late, after making a new high, we are seeing a bit of a profit taking. And since she's planning to invest for a long-term time horizon, I feel that there's a possibility that the stock might retrace closer to around 65, 6,400. That would be the good area to accumulate, considering the past trend also that the stock has been consistently holding on the weekly time frame, this 20 EMA, 30 EMA. So around 64, 6,500 is something that she can start accumulating, and for this entire, position, she should maintain a stop at 5,600. Since she has asked for stop loss also. So 5,600 should be the area where, in the past, we have seen multiple supports on weekly and monthly time horizon. So around that area, in case if it slips below this mark, then possibility of trend reversing from positive to sideways is much higher.
All right. Vodafone Idea is the next counter that we're talking about, and we've got a considerable amount of shares that have been bought by Adi, who's riding in from Bengaluru, and bought 2 lakh shares at a price of 15 rupees. Lost considerable amount of value over the course of the time that he's held it. The stock is currently trading at 7.88 and it's up about 5.5% today because of a positive development. It has in fact come to light that the government of India has waived financial bank guarantees for a spectrum acquired in past decades, and the waiver is applicable for the bank guarantees that were acquired between 2012 and 2021, which is subject to certain terms and conditions. So this is part of positive news flow that has come through for the company, and it has gained in fact 5.5%. Now, I'm not really sure what the thinking was when he bought it, but a lot of people did buy at that level, at that price. He's got only a 6-month time horizon, and so from that perspective, Ajit, I'm coming back to you. Should he exit on rise, and what are the kind of levels that he should look at? He's in considerable loss right now.
So true, Alex. So in fact, if you see that you have rightly mentioned that mostly people have invested around the QIP time, also around 11 was the level, if I'm not wrong, and the stock has been trading below that mark as well. And though there are multiple occasions that the stock made an attempt of recovery, but again, every time it reaches to this 9.5 area, we see some bit of a profit taking again emerging in. So my strategy would be to utilize any recovery towards 11 or 12 area to exit this, or maybe you can look to switch to Bharti Airtel even at current levels also if your time horizon is over a year.
So that's the view coming in on Vodafone Idea. I think, Alex, it's very important for people to understand that, at the end of the day, Vodafone Idea is a penny stock, and 2 lakhs is a significant amount of shares to buy at, 15 levels, and now sitting on such a significant loss.
So it's an interesting perspective because people don't have limits that they put on individual stocks as part of their portfolio. Correct. And I think that is the biggest mistake that people make. If you look at even mutual funds, of course, fund managers complain about this, but most mutual fund schemes, fund managers are forced to take a 10% limit on the upside per security. Anyway, we have, we'll come back to that. We've got a listing that took place, and what a listing it was for Cenoris Pharma. It is up about 44% right now, off the high point of the day. We spoke with Swapnil Shah, who is director at the company, and asked him about the company's target for the next couple of years. Here's what he had to say.
As I've been discussing about, expanding our base in the US, largely on the injectable side, and then other product acquisitions that we probably want to do at some point of time. So the growth will be driven largely on these 2 accounts, as well as our CDMO, CMO business presence that we have in the US. So that will continue to expand both on the government as well as controlled substance side. And we have about 51 products in our pipeline that will soon get approved, or maybe some of them will get filed. So that will continue to drive our growth in next 2 years time frame as we speak.
Right, that was the management of Syneris Pharma who did tell us as to what the future aspects of company look like. And there you go, stellar listing on the bourses for the company. Couple of names listed on the bourses, but this one really stood out, Alex, actually.
And the other one that, so we talked about the first one which didn't do particularly well. That was Carraro. But the other, Ventive, is also doing reasonably well. But just to complete that point, because we were making it, mutual fund managers are forced to have an exposure of 10% per security in most of the schemes that they operate in. And what that does, it's very interesting, because if you have a fundamental portfolio and you have 10% and you maintain that limit, what is the worst that can happen? You lose 10% of your portfolio. But when you have a large amount of money that is stuck in one particular security, 2 lakhs of Vodafone Idea, of course you can have absolutely stupendous gains, but then what is the potential for loss? So think about the kind of risk reward that you can potentially have, and if you have an idea for the entire portfolio, which is what you should have, even if it is aggressive at 15 to 17%, you can construct a portfolio that is not going to lose as much value. To that end, let's go to the next caller.
Yeah, we have our next caller. Surendra from Karnataka is calling in. Surendra, thanks for calling in. How can we help you?
I have this ZF commercial share. I bought it around 11,590.
Okay.
I have around 11 shares.
Okay.
So my target is around 12,726.
Okay.
So is it correct? Should I hold it, or so what I supposed to do here? So.
All right. Is this target technical based target, or have you studied the company?
Kind of technical based, because the next resistance is at 12,726.
Got it. Got it. Ajit, I'll come to you on this one quickly. How does ZF commercial look on charts?
After this sharp correction, on the weekly charts, we are currently hovering around the major averages. Once we break this first barrier around 12,100 mark, then yes, what the target which he is anticipating close to around 12,700 mark is something that the stock might test. But at the same time, considering that the trend has not reversed yet, they should be careful, and 11,500 should be his strict stop loss in case if the trend reverses.
Okay. All right, let's take the next caller. We've got Udayan Bhatt, who's calling us from Ahmedabad, and he's got Ashok Leyland at what I think is an attractive price. Let's pull up the chart and see what it's currently trading. What a beautiful acquisition that is. Udayan, welcome and good morning. Thanks so much for calling us. How can we help you today?
Sir, good morning. This is Udayan, but a senior citizen from Ahmedabad. I'm indeed delighted to talk to you.
We are more delighted to speak to you, Udayan, because
actually, yes, sir. May I put my queries to you?
Of course, please go ahead.
Yes. Actually, I was holding 2,500 shares of Ashok Leyland around 2000 in the year 2011. Okay. Against that, I got 2,500 as bonus shares. Out of that, now presently I am holding 2,000 shares of Ashok Leyland. Okay. So from 262 to 221 today it has reached. It has gone down. I need to know from your side, sir, what should I do? Because my son is in pressing necessity of money. So till how much I must wait? What is your kind advice to me?
Okay. So Udayan, am I understanding correctly when you say that you're in need of the money? You need to use the money right now?
My mom, I want to help my son who is in Mumbai.
Okay, understood. Okay, so let me take your question. So you bought it on the fundamentals. This is part of your portfolio, right, Udayan? You have other shares as well?
True.
Okay. So let me go to Ajit on this then, because it is a relatively short-term question. He's held for a long time. The acquisition price is 50 rupees because the acquisition took place way back when, right? More than 15 years back or thereabouts. What levels should he look at to exit at this point, Ajit?
So Alex, he clearly mentioned that he requires this money. So I feel that it's not important whether he should see any level or not, considering that the short-term volatility might continue within the auto space also. Though Ashok Leyland is doing comparatively better, and below 215, this may also witness a decline towards 205. But that's not significant. I feel that since he requires the money, he can definitely book some profit. And in case, at the lower end, in case if it again slips to around 200, 190 zone, he may re-enter.
All right, so that's the view coming in on Ashok Leyland. The next query is from Soma Shekhar, who's from Hyderabad. Now he's probably holding 1,000 shares of Jio Finance, and this is bought at the levels of 343, and he wants to know whether he should keep holding them or sell them. Saurabh, I'll come to you on this one. How does Jio Finance look to you fundamentally?
Fundamentally, I think the company has set up the online portal. The company is, will be doing all kind of business, all kind of activity, mutual fund activity. They have a tie-up with the Blackstone. They will be lending through for the SMEs, for the personal loans and all. All the activity will happen through the digital mode, and the company is yet to take off, yet to make a takeoff. While from the long-term perspective, I think it is a good stock to hold. From the short term, it is very difficult to say. I think if you have a horizon for next 3 to 5 years, it is a hold for me.
If you have a long-term time horizon, then it's a hold on Jio Financial Services. Brajesh from Sioni in Madhya Pradesh is asking about Kalyan Jewellers, which he's bought at a price of 403. He's looking for a 2-year time horizon, and it's an attractive buy price. He's been holding 100 shares and he's wondering what to do. Saurabh, on the fundamentals, should you add more? Should you hold? What's the perspective?
I think off late, what we are seeing on the market is that with the rise in the gold prices, the sales were languishing in the festive season also. So to my mind, the valuations are on the higher side, and maybe we would see some kind of the growth getting tapered off in the December quarter and in the quarters to follow. So I think it is better to wait for the quarterly earnings. And if you are making some money, then I think it is better to take off the table. My sense is better to book profits.
All right, book profits for Kalyan Jewellers is the view coming in from Saurabh. We have our next caller, Krupesh from Karnataka is calling in. Krupesh, thanks for calling in. How can we help you?
Thanks for receiving my call. My name is Krupesh. I'm from Karnataka.
Okay.
My query is, I bought a share, HL share at the rate of 4364.
Okay.
So currently it is running at 4199, something like that.
Okay.
So currently I'm in a loss of around 14 to 15K. So whether shall I hold it or sell it? I just wanted to know that information.
Okay. What was the thought process behind buying HAL, and what is the kind of time horizon that you can hold the shares for?
Yeah. So I just bought it according to fundamentals, and I'm holding it. I kept it for a longer time. I don't have any short-term decision of selling. Yeah.
All right. Saurabh, I'll come to you on this one. HAL fundamentally, how does it look?
See, while the fundamentals look strong, but it is the valuation which is on the higher side. The stocks, all the defense stocks got re-rated in the last 2-3 years, very highly re-rated, and now we are seeing some kind of a moderation in the valuation. And if you look at the operating numbers, also there is no. I think there is in some cases there is a degrowth also, which is not justifying the high valuation. In the last 6 months, the stock is down by 20%. If you are having a long-term perspective, then you must have a perspective for the next 3 to 5 years, and then only you can hold on to it. Otherwise, you may see further selling with the correction in the markets.
All right, so that's the view on HAL. We've got Maheshwar from Hyderabad who's calling us, asking about Grindwell, I believe, Grindwell Norton, which he's bought at levels of 350. Hi Maheshwar, thanks so much for calling us. How can we help you today?
Yeah, I brought it for I'm keeping it for the last 5 years.
Okay.
It touched at nearly 3,000 rupees.
Yes.
And it came back to 1,900 again.
Yes. So you want to know whether
to
hold
it or book some profits.
Okay. Maheshwar, are you in need of funds right now?
No, I'm not in need because I'm holding this stock for the last 6 years or so.
Yeah. And so, so you're concerned.
Is there any scope for touching again 3,000 rupees? That is my question.
Okay, so that depends, Maheshwar, on the time horizon that you have. So since you held...
I can keep it for a long time.
Got it.
I'm already holding it for the last 6 years.
Exactly. That was the point that I was going to make. Since you've held it for so long, I'm guessing you're not in a rush to sell it. And so from that perspective, let me go to Saurabh on the fundamentals. Grindwell Norton, what's the view here? If you've lost notional value, I mean, I guess a lot of stocks have hit all-time highs and come off from that point. Would you hold on at at the current levels if you bought at levels of 350, which is an amazing acquisition price, Saurabh?
Yeah, I mean, it is a very good acquisition price. He's holding for 6 months. I think he can hold for another 3 to 5 years. So in that sense, I think manufacturing sector is likely to shine going forward. And so the company largely makes abrasive, and the manufacturing sector when shines, the company also will also make good growth. It is only because of the valuation that the stock has corrected. Over a period of time, I think you will see the company again surpassing its 52-week highs. So in that sense, I think there is a hold for next 3 to 5 years.
All right, so that's the view coming in on Greenwell Norton. We have our next query on Mamta Machinery, which was recently listed, and it did have a decent, not stellar, but decent listing, as compared to the kind of subscription it had. Rahul Kaushik is writing in, and he wants to know whether he should continue to hold the shares, and he wants to know that he should keep holding them or sell them and book profits. Saurabh, I'll come to you on this one. Do you have coverage on this particular counter?
Won't be able to comment on it.
All right. Okay. I don't think that we have enough on charts to come to you, Ajit. So I'll take the next query. The next query is on Satin Credit Care. Do we have the viewer link? Pawan? Yes.
Yeah, we don't have the buy price.
Yeah, we don't have the buy price. So he wants to know what should be done with Satin Credit Care. His average buying price is 478.
No, I don't think that's right.
Yeah, I don't think that's right, because currently the stock is trading at 145, and he's bought around 100 in quantity, and he's bought this 1 year, 5 years back.
Yeah.
Okay, so he's bought it 5 years back and bought it at the levels of 478, but the stock has come down to 145 now. I believe that a fundamental view on this will make sense. Saurabh, I'll come to you on this one. Do you think he should continue to hold this or book losses at the moment?
I think quite a lot of negatives have already been discounted in the stock prices. There is a huge rise in the delinquency rate for the microfinance lenders, and that is why we are seeing good amount of selling coming in the stock. On the valuation side, it is now trading at a half times book value. So I think if things gets better, then we may see the stock will get bottom out. Already he has lost so much money. I would not recommend to add more of this stock, but at the same time I would recommend him to wait at least for the December quarter earning and wait for the management guidance. In case management fail to cheer the market, then it will be the time to sell. Otherwise, go hold for long.
Hold is a call on Satin Credit Care, not a stock that has returned a lot. But it's time for the rapid fire round on this show. This is where we throw as many questions as possible at our two experts over the course of 2 minutes and have them answer them. So to that end, let me start it off with a question on Manappuram for the short term. What are the targets and stop loss that you would have? This is a question from Kumar. Ajit, on the charts, what would you say?
So Manappuram, Alex, we have seen a decent recovery after the sharp meltdown from 225 to 135, and the stock has recently formed a fresh base.
Sorry, a quick answer. This is rapid fire.
Right. So in that case, 182 should be your strict stop loss, and 205 to 10 that should be your target zone.
Okay.
All right. BHEL is the next counter. Should the person keep holding it or exit? Give idea. Ajit, I'll stick with you for this one.
BHEL is an exit, Mahima, considering that we are seeing fresh decline, and decline below 229 may result in further dip towards 210.
Okay. Zomato bought at levels of 192. Would you hold for the long term, or actually would you sell and purchase Gensol Engineering is the question, Saurabh. Abhishek wants to know.
Hold Zomato, avoid Gensol.
Okay.
All right. Karthikeyan wants to know whether HCL Tech bought at an average price of 1050. Should he hold or book profit? Ajit, this is for you.
Definitely hold. It's an outperformer within the IT pack, so he should definitely hold.
Okay, Sun Pharma, and this is coming back to you, Ajit. Sun Pharma, Gul wants to know whether it can be bought right now for a period of 1 year.
Certainly, we can buy with 1800 as a stop loss and 1950 to 1980 as a positional target.
All right. Paytm is the next counter, bought when IPO came in. Saurabh, should he keep holding it from long term?
Hold.
Okay. M&M bought at 3,110. Anil wants to know, would you hold on to this or not? Saurabh?
Hold.
All right. Bharatwaj from Vizag is writing in and he wants to know as to what should be the first pick for his portfolio. Saurabh, I'll stick with you for this one.
First pick, I would recommend Natco Pharma.
Okay, Natco Pharma. We really held the gun to your head this time, Saurabh. Out of all the stocks that were available, you chose one. All right, on that note, thank you so much for joining in, gentlemen. Ajit, Saurabh, pleasure having you on the program. And that brings us to the end of this edition of Ask Profit. It's been an absolute pleasure bringing it to you from Mahima and myself and the team that put the show together. Thank you so much for watching. Do stay tuned. Lots more coming up on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to KYC, a brand new show at NDTV Profit. And in this fast-paced world of stock market, investors are bombarded with information, but what they often lack is deep, comprehensive understanding of the companies and they invest in. Know Your Company is a show designed to give you regular investors some powerful, actionable insights into fundamentals of a single NSE-listed company every day. And today we are going to talk about Aira Realty. Now, this particular real estate company has done very well through the course of the last 1 year. It does provide residential and rented commercial and properties as well as part of its profile. And besides that, it is focused on premium developments in the luxury and the mid-luxury space. Well, for anyone who lives in Mumbai, they are aware of this particular brand in realty, that's Aira Realty. Besides that, they also operate in Ahmedabad, Bengaluru, and as well they have an international project going on in Bahrain too. Now, this is as far as what the company is doing at the moment. The portfolio has seen about 20 million square feet of projects being completed. Besides that, about 1.1 million square feet of projects which are ongoing at the moment. And we do have about another 1.7 million square feet where the potential launches on the cards, along with the fact that about 11.1 million square feet is what entails in future development potential. Now, we're going to talk about all these factors a little bit later on as far as the management is concerned. But that said, let's also take a look at how the company has done so far. And as usual, what we try to do is essentially rate all these companies on the key areas that would include something like your income statement. But in this case, of course, we're working off the key operational metrics as well, since the real estate sector has a lot in terms of your pre-sales too. But we'll talk about the balance sheet as long as cash flows, along with your return ratios too, shareholding pattern, along with street credentials and dividend payouts. But let's get in my colleague Anushi, who will also help us elucidate further as to how this particular company has done so far. So Anushi, thanks for joining in. Let's start off with the key operational metrics, because that perhaps is the most important one in terms of judging a real estate company.
Absolutely, Agam. So for the key operational metrics, before we talk about the income statement and balance sheet and all that for a real estate company, what is the most important factor to consider is its pre-sales, the collections number, as that would be the indicator forward with what kind of revenues and how the company is doing financially. So if you look at the sales value for the company, we've seen a decent amount of growth between FY 23-24 and H1 of this year. 842 CR was what was the pre-sales figure, that's the sales value, which is increased to 1,000 crore in FY24. If you look at H1 FY25 performance, they've clocked in about 18% of growth for the year. Very important to focus on the Q3 and Q4 trajectory of the company, as that is when the real estate sector in general is expected to be stronger. Collections, if we see, collections also have remained in FY23 and 24, have remained in a similar range, 532 crore, 570 CR, and in H1 FY25 we are almost looking at a 300 crore shy of mark in terms of your collections is concerned. In fact, in H1 FY25 we've seen about a 34% of growth in terms of collection number where that is concerned. Sales volume, now if we take the whole real estate industry in general, one common thing that we have seen in the first half of this year is that the sales volume number have seen a downtick. What was 2.44 lakh square feet in H1 FY25, this is the amount of land, amount of volume that they've sold. It's seen about a 4% of a downtick. So again, the emphasis is on the future commentary of the company. We will be connecting with the management. So sales volume is definitely one indicator that we should be looking forward to. But as per the operational metrics, this is how the picture is building.
Right. So some very important metrics coming in focus. But let's talk about how this has already translated into your top line and your bottom line for Aira Realty so far. So if you consider the first half of this, financial year, you will see that there's a 51% growth in terms of your top line, and another 55% growth as far as your bottom line is concerned. Again, your EBITDA margins remain very healthy, well over 30%, 33% to be precise for first half of FY25. But moving on, if you consider the balance sheet, let's see how that's panned out too. So when it comes to the balance sheet, currently its net worth stands at around 865 odd crores. Its long-term debt and short-term debt taken together is a little over about 800 odd crores. So, that said, in terms of its cash in bank, that stands at around 116 crores. So its debt to equity, its net debt to equity is well below the mark of 1. And from what I understand, that the management has suggested that they want to keep it at around 0.8, and it's roundabout there. But that's as far as balance sheet is concerned. So overall, in terms of the third parameter too, we'll give it a thumbs up on the back of good operational metrics. A pretty steady growth as far as its top line, bottom line is concerned, along with operational performance, as well as its balance sheet, which looks good. Anushi, what about the cash flows here?
Right, Agam. So if you look at the cash flow from operations in the first half of this financial year, that stood at roughly around 148 CR. 148 CR was what was in FY24, which now we are looking at a 74 crore of figure for the first half of this financial year. And net cash flows, we are seeing a negative number at 46 CR as compared to around 77 crore as of FY24 end. But I also want to talk about what the company in its presentation have stated. Now, if you look at the cash flow potential of the ongoing projects, upcoming projects and other avenues, they estimate around 2,300 crore of cash flows. This is over the life cycle of various projects that they are taking place. So very important to take that into consideration as well. The timeline as to when these cash flows we will start seeing in the financial statement is something that we should be watching out for. Cash flows from other avenues is also estimated to be around 330 crore or something. So very important to focus on that part of cash flows, Agam. So yeah, that is on the cash flow picture that we are building on.
Right, fair enough. So based on cash flows, we've addressed three very important financial statements. That is, of course, the revenue, the balance sheet, as well as the cash flow statement. So let's come to the return ratios. Now, I must admit that the return ratios have improved for FY24 over FY23, but they've still been lacking. So firstly, when it comes to return on equity, that return ratio stands at around 11.5, an improvement over 10.5 in FY23. And return on assets, again, are higher at around 5.5% versus 4.6%. So they've certainly been seen an improvement, but they're well away from the ideal return ratio of around 20-25%, which is why we'll give this a thumbs down. And finally, coming down to shareholding as well, we're going to give this a neutral rating because firstly, among the positives is that it has a reasonably high promoter holding of 68%, well over 2/3. Its institution holding is not considerably high, which means that the balance is with the public. And that, so which is why that's something, because the relative lack of institutional holding is the reason why we'll give this company a neutral stance as far as its shareholding pattern is concerned. But coming down to its price movement as well as dividend payout, Anushi, how are these two aspects looking?
It's been a strong year for Aira Realty. If you talk about the stock price movement, in last 6 months, we've seen about a 52% of growth, 1 year, 131%. So quite a strong investor return in terms of what they've done over here. In fact, over the 5 years also, the stock has almost seen about a 8x gain. So very strong in terms of performance is concerned. Coming to the dividend payout, we'll give this a neutral rating. Around 12.5% is what this is as of FY24 number that we are looking at in terms of the dividend payout. So yeah, this was the overall outlook in terms of what the street performance was as well as the dividend payout.
All right, so there you have it, and that gives you an overall rating of how the company is. Of course, very quickly, let's look the revenue. So we have about 51% revenue growth, as I was suggesting, and we're about 33% EBITDA margins coming in with the profitability also moving up by around 55%, which explains the kind of growth that you've seen for the company for this calendar year gone by. So where does that bring us in terms of your total rating for the company? So it's certainly a big positive for key operational metrics. Income statement growth looks good. Balance sheet checks out well, along with its cash flows as well. And in terms of your return ratios, that seems to be lacking. Shareholding, again, it's a neutral rating, but as far as the street credentials are concerned, with the kind of movement the stock has seen, is certainly going to be an up. And dividend payout ratio has, well, again, been not amazing, but you must realize that this is a growth company, which is why it would ideally want to use a lot of its funds towards, well, capital expenditure. And still, it has a dividend payout ratio of around 12.5%, which is not bad for a real estate company, which is why we've given it a neutral rating. And that brings our total rating for the company at around 6 out of 8. So it certainly made a distinction as far as the overall rating is concerned. But, that said, let's talk about a little bit more about the guidance of the company. So Anushi, I'm going to come back to you on the guidance going forward.
Right. So as per what the guidance is for the company, now the pre-sales guidance for the year is around 1,350 crore. So considering the H1 performance, around 41% is what has been achieved. Debt to equity ratio, they plan to maintain it in the 0.8x range. You've talked about this before also. They have a launch pipeline of around 4,570 crore. The next 2 quarters, important to watch out how they'll perform in terms of where these launches are. And in terms of new project additions, they plan to make around 3,500 crore worth of new project additions for the year. So this is as per the FY25 guidelines of the company as we speak.
Right. Well, and if you look beyond FY25, because, FY25 end is just around the corner. In fact, there's just 1 quarter left. Well, we do have more visibility on ongoing projects, which stands around 1,780 odd crores. And well, the company sees a potential of around well over 6,000 crores on an ongoing and potential launches as far as your outlook is concerned. So we're certainly looking at some very good numbers, which could potentially provide for that growth, moving into the next few years. But let's talk about the upcoming projects and launches as well, in which these numbers come through in entailing. So Anushi, what can you tell us about that one?
So in terms of where the upcoming projects are, firstly we need to concentrate on the 4th quarter. There's Kanjurmarg project approvals which were in place, so the launches of that one would be awaited. The plans of the commercial developments is something that the company has been eyeing on for. This is through partnership routes as well. So Wadala project is something that could be focused on. This is with the commercial focus that the business plans to aim. But that is overall the upcoming projects and launches that one should be expecting for this portfolio expansion vision for FY25 and beyond as well. If you look at the existing portfolio size, that is around 1.1 million square feet. The company expects in future this number to increase to 2.8 million square feet. Launch pipeline also 1.3 to 1.7 million square feet is what the aim is. And sales inventory, this is the number where we are looking at a significant amount of jump. 727 crore is the existing inventory in place, and they expect this number to go to 4,270 crore. So more than a 5x jump that we are looking, almost a 6x jump that we are looking at in terms of where the sales inventory could be for the company. And what is important is also the geographical expansions. Currently 5 locations in place, which they aim to expand to 13 locations. So this is the upcoming projects, the vision that the company has for future.
All right, there you have it. So that's as far as the outlook is concerned, but let's talk about the outlook with the management themselves. So Anushi, stay with me. We have with us Dhaval Ajmera. He's a director at Aira Realty and Infra, who joins us on the show right now. Dhaval, good morning and thanks for taking the time out. Well, as you know, among the many discussion pointers that we've already come through on Aira Realty, well, among the first factors that I'd want to ask you about was whether or not your guidance for FY25 is on track. We just have 1 more quarter left. Of course, we will have the 3rd quarter earnings announced a little later on in the next few weeks as well. And if you could also tell us about your key launches in the next couple of quarters, which could potentially come and start contributing down the line.
So thank you very much for inviting, and very impressed with the detailed presentation and the things which you've done for the company. All I would like to say is the company is going on track with the pre-sales guidance. We have achieved a lot what we had targeted in terms of our pre-sales quarter on quarter, and we continue to do so even in the coming 2 quarters as well. As far as the launches are concerned, yes, there are a few launches which we have been working on. There has been a few approval issues which have come because of the Supreme Court NGT order, where the approvals are getting a little bit delayed. But however, maybe we are still very hopeful that we still have 3 more months to go and we should get the required requisite approvals for it to get launched. But having said that, we are not moving beyond. We are not, shying away from the pre-sales guidelines. But yes, we are just a little bit jittery on the launches because of the Supreme Court things. If that comes in, then we'll probably have all the launches also coming in place.
Right, Mr. Ajmera. So lack of approvals is a factor that we've seen across the real estate industry in the first half of this year. Just want to ask you more about this. Is this a situation where we've seen this concerns receding as we step forward in the third quarter as well? What could this mean in terms of the pre-sales growth? Are you in line with what has been stated in FY25 guidance, and not just FY25, even if you look at for FY26 guidance, what is the picture ahead for the business in terms of where the pre-sales is concerned and the launches expected?
Look, I'm just, what I personally feel is that this is like a temporary glitch which has come in, and we are hoping Supreme Court will take, cognizance of this, and which is where a lot of approvals which are stuck within, not only in Mumbai per se, but all across India, which will come into place. But, as far as our pre-sales, the guidance is concerned, it will definitely be matching. We are very much on that as a target. Our only concern is that a few project launches which we were supposed to happen in these 2 quarters, which we are still very hopeful that if things come in order, where we are expecting Supreme Court to give some judgments within January. If that goes through, probably we will have a few more launches also coming in line. But as far as a longer picture is concerned, it's nothing to worry. We are absolutely on track with all the approvals, with all the guidance. It is a few glitches which is on, and I'm very sure that this will be also through in the next month or so.
Well, the numbers that we have with us is about the 6,000 crores worth of revenue potential on ongoing and potential launches down the line. And if you could give us an idea about what this period could look like, and I'm sure that a lot of this is subject to approvals as well as the execution of these various projects, but if you could give us a rough timeline on perhaps recognizing these revenues.
So, all these projects, what we have announced of 6,000 crores, which is existing, current launches and the new launches, the timeline for all this will flow. The entire 6,000 crores revenue will be under balance sheet in the next 3 to 4 years time. So you see, every project of ours is earmarked in a way that we finish the project in 2, 3 or maximum 4 years. So that's how this entire 6,000 crores will pan out in the next 3 to 4 years time.
3 to 4 years is what we are looking in terms of the sales number that you've mentioned. I also want to address on the cash flows. Now, cash flows, if you look at FY24 and H1, you've given a very optimistic commentary on as far as where the cash flows would be concerned. This is including the new launches of some of the projects that you anticipate going forward. This is roughly around the size of 2,000 crore. Can you give us more details on that as well as to when we will see this positive numbers coming back into the picture in terms of where the cash flows are headed in future?
So, our cash flows are mapped and married to every project. And what we really see is that whenever we launch a project, there is a certain amount of investments what we do from our mother company, whereas the other things have been managed by the sales and probably the debt or the working capital requirements. So, and what we are also saying is this 6,000 crores is only of the projects which we have planned to launch in this financial year, or probably at most at the first quarter of the next financial year. And beyond this also, there are other projects worth about 10 to 11 million square feet, which will come into picture over the next 2 years or 1 year or 2 years time, which will also invent and give us the cash flows which are required for the company. So overall, the company has a very healthy cash flow which is coming through from the sales, and our returns in terms of our sales performances are concerned, or the cash flows are concerned, have been significantly very, very positive, because we have seen good amount of sales coming, which is managing the project by itself, and we are less dependent on debt. In fact, right now also, when we had the preferential allotment, we have in fact paid away 100 crores of our debt, and we are reducing our debt size. So the company is moving towards a positive cash flow, and we continue to see this in the coming financial years as well.
Dhaval, we're looking at a very good period for the entire real estate sector. The last 2 to 3 years, the entire sector has gone up, and it's come out of a very, very long period of maybe 10 to 15 years where conditions weren't exactly the best. My question then is, how does FY26 look as compared to FY24, FY25? Do you think there could be challenges? Also, if you could give me an idea in terms of saturation in the market when it comes to buying property.
Look, my overall thing is that the real estate market or the Indian economy is moving on a very, very positive direction in spite of all the, external, segments. Like if I have to look at the wars which are happening all across, but still Indian economy has been very resilient. And post-COVID, we have very clearly seen that the asset investment, whether it is gold, whether it is stocks, whether it is equity, or whether it is real estate, probably real estate preference have come up post-COVID. And that is where we are seeing a lot of inflow or demand of real estate coming in from people at large. And what I see is that this will continue to grow over the next 5 to 7 years for sure. And I really don't see saturation happening unless the prices significantly start increasing, in which I have seen, post-COVID, when the market has been good, developers have not dramatically increased prices, but they have, marginally increased prices over the time. And that is why there has been a good shift of demand versus supply. And we have seen good numbers coming all across from the entire industry. And what I also see this to be continued over the next 3 to 4 years' time. And overall, there has been a good demand. We have seen in our projects, whenever we've launched, we've done 50%, 70% or 60%, sales during the launch phases itself. So that shows the overall economy being good. And as far as our company is concerned, I'm very sure that, with the kind of launch pipelines, what we have in the projects, what we continue to grow, we are looking at 25 to 30% growth year on year.
Well, in the near term, over the next 1 year, would it be safe to say that rental yields will move considerably higher as compared to, say, for buying a residence or for that matter, commercial properties concerned?
So definitely commercial has been in a great demand in the entire Indian market, Indian commercial market. And what we see is, the best yields in terms of, commercial assets or the real estate asset has been commercial. And which I foresee this will continue over the next 5-7 years for sure. Even in Mumbai, if I have to particular a micro market of Mumbai, if I have to say, because of the redevelopments which are happening all across, I think the rental yields for residential has also been significantly better as compared to past 2 years' time. So yes, this will continue. And now with the, the long-term capital gain being almost equal for every asset class, I think real estate has become a preferential investment asset class for people to invest and get a better rental yield. So overall, I think it's been a positive move, and we see this continuing over the next 5-7 years for sure.
Well, Mr. Ajmera, while there have been talks about the demand growth sustaining for the next 3 to 4 years, as you've pointed out, there have been concerns of the kind of pricing growth that has taken place after the COVID period in these 2-3 years especially. That there are expectations of pricing growth now stagnating to a particular level. A single-digit growth is what is expected. Taking your company into consideration, what does it mean for a real estate company when the pricing growth is increasing in a very rapid manner and then it starts to stabilize at a certain level? Some of the key markets also, if you can give us a picture on that, which includes Mumbai, Bangalore and more.
So, as I have always said that if you look at even our company, we have, grown our prices, but at a steady rate and not made it 30% or 40% growth year on year. So far as every real estate developer in the market, if the pricing has been, growing in comparison to the inflation yield or probably at a 6, 7, 8% incremental year on year, I don't think there will be a stagnancy coming in. The demand will also continue to grow accordingly because people are personally also growing in that fashion. So I don't see that unless and until, the jump is 20, 30% year on year, there will be a problem in the pricing. The company can get better volumes than what we've seen, that we've grown from a 300 crore to 1,000 crore over the last 3 years, and that is only been doing better volumes and not by increasing pricing. So, so far as if this continues to grow, and I feel majority of the real estate developers are moving in this direction, and this will help the market also, grow, expand in a better way.
Okay, Dhaval, we leave it at that. Thank you so much for shedding so much light as well as giving us a lot more insight into not only your business but the real estate sector as a whole. Well, we thank you once again for your time.
Thank you, and wishing everyone a very happy New Year.
You too. Happy New Year to you as well. Well, but on that note, we are at the end of this edition of KYC, but lots more lined up on the other side. Stay tuned to NDTV Profit. Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers,
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Hot Money. I'm Hiral Datia and with me is Anushi Vakaria. Good morning. Good afternoon, Anushi. Clearly, just 2 days in terms of markets before we end 2024. Some positivity comes in today as well. We're seeing gains of almost 0.3 to 0.4% on Nifty 50, but we're below the 23,900 mark. We did hit a 23,915 in trade today, but we're nearly at the day's highest levels as we speak. Overall, if you see in terms of the advance decline ratio as well, 29 advances versus 21 declines on Nifty 50. Let's see what the stat pans out in terms of NSE as well. There you go. The declines are higher in terms of overall markets versus the advances. Let's pull up the sectoral heat map and understand what is keeping us afloat and what is putting in pressure. Media is down in trade. Auto is seeing some profit booking after 2 or 3 consecutive sessions of gains. In fact, Wednesday is when auto sales data starts trickling in as well. IT is trading under pressure. Metals is also under pressure as we speak. What's bucking the trend is the private banking space. Nifty Bank is up nearly 1% in trade. PSU banks are also seeing a good day of trade overall. Pharma is seeing gains of almost 0.5% in today's session. And you have real estate, which is up almost 0.3%. In terms of individual stocks, Adani Enterprises, stock up 5%, a brokerage note coming in on that one. Strong moves coming in on that stock. Shriram Finance is also bucking the trend today. IndusInd Bank is up in trade. Axis as well as ICICI Bank. What's losing? Wipro is down. Dr. Reddy's, though the pharma pack is in the positive, you have a Dr. Reddy's which is down almost 1.2% today. Trent is trading under pressure. Grasim is trading under pressure, as well as a Hero Moto which is seeing cuts of almost 0.8%. So that's with regards to the large cap space, Anushi. But clearly, what are the trends that you're picking up in terms of broader markets?
Absolutely, Hiral. So in terms of where the broader markets are concerned, a mixed picture is what we are seeing. If you look at where the Nifty Midcap 150 is headed currently, while that is up in trade today, we are looking at about gains of 0.24%. This is led by counters like Vodafone. Vodafone 5% up today, after the big news that it has come, wherein they'll be getting some reliefs in terms of where their dues are concerned. Vodafone around 5% of gains, Sumitomo Chemicals 4% of gains, Biocon, JSW Energy, big acquisition news in picture around the size of 12,000 crore. Phoenix Mills, again, one of the gainers in trade today, while on the losing side of where in the Nifty Midcap is concerned, we have names like Ajanta Pharma, Gujarat Fluorochemicals in focus, around 3 to 4% of losses that we are seeing in trade today, along with some names like Devyani International, GIC, Mazgaon Dock seeing similar levels of a downtick in trade today. But as far as where the small cap 250 is concerned, about 0.3% of a cut is what we are seeing. This is in contrast to how the benchmark markets and the Nifty Midcap index was doing. But what's leading to this drag? Let's understand that we have counters like Ratnamani Metals in focus, that is around 5.6% down. Intellect Design, Triveni Engineering, Scaife and Tech, other couple of names seeing about 4 to 5% of downtick in trade today. But let's also look at some of the counters which remain in focus despite the weakness that we are seeing in the small cap space. We have counters like ITI Limited 15% up in trade, AstraZeneca, Happiest Mind, Credit, Zeneca, other 3-4 counters we are seeing about 7 to 9% of gains in trade today. Well, this is as far as where the broader and the benchmark indices are concerned here.
Absolutely, a lot of stock specific action that's happening with regards to broader markets, and it's going to be interesting to see what moves 2025 from here on. But let's move to our key themes. Capacity expansion and operation scale up is in focus today. 2 companies that we will be talking about is Ipca Laboratories as well as KEI Industries.
Second theme is acquisitions and amalgamations. Two companies in focus here are JSW Energy, which is acquiring two companies for over 12,000 crore, making it its largest acquisition since inception, and Coforge will acquire up to 54% of Signity's share capital.
And we will be talking about fundraise. You have Deep Industries as well as Shakti Pumps. Both these counters, in fact, strong up move seen in these stocks.
The telecom department gives bank guarantee relief to telecom operators. Vodafone gains close to 6% on this account. That's our next theme in focus.
And moving on, you will be talking about brokerages of the day in terms of the stocks that we will be focusing on. Zinka is one and Adani Enterprises too.
The next theme is India on the order wins piece. We have seen a couple of companies in focus of their order wins, and these are some of the small cap companies that we should be focusing on. So that's the next theme for the day.
And on number 7, you have fatal incidents that have happened at Alkyl Mines and Gujarat Fluorochemical. Now this has led to disruptions with regards to where operations go. What will be the impact?
Eighth theme is about Apollo Microsystems revenue growth outlook. 40 to 45% is what their projection is going forward. We'll check that out as well.
And moving on, today's listings that are in focus: Senores Pharma, Ventive Hospitality and Carraro India. Let's understand what these listings mean from listing gains perspective and what's in store going ahead.
And coming to the final theme of the day is FICCI's budget expectations to Finance Minister. We bring you a detailed report up ahead on this show on the same.
So these are the 10 hot topics for today. But now that we're looking at capacity expansion and we're focusing on Ipca Laboratories, my colleague Varsha stands in with Ipca. Varsha, overall, in terms of Ipca Laboratories, what's happening with the Ipca Laboratories? Why has the stock been on the radar for brokerages?
Well, thank you for that. First of all, let's see what are the stock returns that Ipca has given. So in the last 1 year, stock is up almost 50%. Now this is on the back of strong performance in H1 FY25 by the company, and also brokerage is positive on Ipca Labs. Let's see why brokerages are positive. First is the company's leadership in domestic formulation business. So company is consistently outperforming the India pharma market by 11 to 12% of annual growth, and they are the leading market share in 2 of their products, which is into key segments like pain and cardiology. Next, if you see their international business, so basically the international expansion and US re-entry is what is actually working for the company. International revenue growth is expected on the back of strong institutional generic sales, and regulatory clearances from US FDA for Indian sites supports US market entry, and they are expecting to touch $200 million for US generic sales soon. Next, if you see, they have actually planned 6 product launches in US in FY25, and expansion. They are also expanding in Europe, Australia and Canada with 10 products approvals in FY25. Moving on, if you see, the next leg of growth actually for Ipca is their subsidiary Unichem, which they acquired in September 2023. So Unichem performance is improving with strong US sales and significant EBITDA growth, which will lead to the growth drivers for Unichem. And of course there's improved procurement, and the API integration for the company will actually helpful for the Unichem integration. Moving on, if you see, the API growth recovery will be actually ramp up for Ipca Labs, and also they expect 7% growth when it comes to API segment for 2025. If I were to talk about what's the outlook, what management is actually expecting for the company, so they see standalone EBITDA margins at 22% versus guidance of 21%. So there's uptick in EBITDA margin guidance, and next they expect revenue growth of around 9 to 10% versus guidance of 10 to 11%, slightly decrease in guidance given by the company. Lastly, let's see what brokerages are saying, why brokerages are bullish. So both the brokerages, that is Motilal Oswal and Nuvama, are bullish on Ipca Labs. Now this is on the back of Unichem's integration and of course the growth in US market for the company, which they are actually bullish on. So Motilal is actually anticipating 27% earnings CAGR growth with 170 basis point margin expansion for the company, while Nuvama, if you see, is bullish on the generic side of the API business of the Ipca and also the integration of Unichem.
Right, so that's with regards to where Ipca Laboratories go. In fact, a lot of technical calls that have coming on Ipca Laboratories as well for today's session. In fact, let me welcome in Sharmila Joshi from sharmilajoshi.com. Sharmila, good afternoon and welcome to the show and wishing you a happy new year in advance. Your view on Ipca Laboratories, taking into consideration a lot of brokerage notes which are positive, as well as a lot of technical calls that I have been seeing on this counter as well.
So first of all, wish you the same in terms of New Year. The last time we'll be talking during this year. So I think, that also puts, last time talking this year also puts the interesting perspective on how you want to look at stocks, because you need to see how the sector as a whole has done this year and what the coming year will mean for the sector as well as for the stock. So for Ipca Labs, the good news is that last year has been a good year for the stock as well as for their sector. If you were to take a list of all the sectors and what kind of returns they have given over the year, then I think pharma would be sort of in the top tier. That said, I think again, the strong sort of thing that works in favor of Ipca Laboratories is the fact that their domestic business is strong and their niche products do well, and that will continue to grow. So I'm absolutely confident that next year will continue to be a strong year for them. The interesting bit next year could come from this US re-entry, and I think a big question mark on that. I mean, in the sense that because we have a new president sort of taking office in January, we also need to see how he sort of shapes policy going ahead and what that means for export-facing sectors like both IT as well as pharma. So January is going to be an interesting month from that perspective. All this said, valuations seem to be pricing a lot of the positives. So while I continue to, I continue to stay positive on the stock, as I said, we just need to watch how this whole US bit plays out next year.
Okay, so a positive view for Ipca Labs is what Sharmila is eyeing on, and definitely focus remains on January month after President takes over. But next talk in focus on the back of Operation Scale Up is KEI Industries. Now the power cable manufacturer has announced increased capex along with greenfield expansion in Gujarat. What's happened is they've revised their revenue CAGR guidance of 18 to 20% of what was 15 to 16% earlier. This increased capex is to meet the revised guidance that we are seeing around 1,000 crore of capex annually against the expectation, against what was earlier around 500 to 600 crore. This is over FY 25 to 27 is what the projection is, especially for the greenfield Sanand plant in Gujarat, wherein they are expecting to utilize around 1,200 crore of capex. In fact, if you look at what has happened is the company was in focus after they had raised around 2,000 crore via QIP. This was to aid the working capital requirements of the business as well, to help the company remain debt-free, and for the Sanand project, the greenfield expansion that we just spoke about, for that also, which is expected to take the cable wiring capacity, we'll see around a 137% of a growth here. Other growth drivers for the company include the cable and wire industry, strong TAM, strong total addressable market here, along with higher contribution coming in from the retail side of the business, and this capacity expansion is something that we continue to focus on. As far as where the order book is concerned of the company, that stood at about 3,800 crore as of the quarter end, as compared to 3,590 crore in the first quarter end. Brokerages remain bullish on the stock. We have Motilal Oswal coming out with its report today with a target price of 5,150, which is a 19% of an upside, and Systematics also maintains a buy. This is with a revised target price of 4,834. So positive view overall that we are looking at where the KEI Industries is concerned. Sharmila, coming to you, in the last 6 months, 1 year, we've not seen much of an uptick on where the how the stock has performed annually, but this company has a strong guideline in terms of where the capex projections are and where the greenfield development is happening. What is your view on a KI industry?
Well, I'm positive, and I think that for me, this is one of the sort of strong mid-cap stocks that you need to be invested in. And I think even if you look at the kind of results that they've given, as well as going ahead, what kind of traction you see both in in the volume growth as well as in their margin, that picture continues to stay strong. And I think even the various verticals, barring I think EPC, are performing for them. And now you have this news of money they've raised, as well as how it is going to, how the balance sheet is going to look after that, as well as this new expansion. So all in all, I think that valuations look a tad expensive, but I think that when you roll over them for the new year, which we will do in a couple of months, then they will look reasonable. So for me, this is a good stock.
Good stock is what KI Industries is on the list of Sharmila Joshi. But moving on, the second theme we're talking about is acquisitions and amalgamations. In fact, three stocks. One is Coforge and Cigniti on the back of the merger is in focus, and you have a JSW Energy as well that is in focus. But let's first look at Cigniti Coforge merger. Now, Cigniti has been trading under pressure in today's session. One of the reasons could be that probably the shareholders are not really happy with the share swap ratio. Overall, the share swap ratio is 5:1. So 5 shares of Cigniti will be given for 1 share of Coforge. The swap overall, if you see, slightly favorable by around 2.17% for Cigniti shareholders, and that's one of the reasons probably that the stock has been trading under pressure. It will lead to around 4% dilution in terms of where Coforge's shares go. This merger was announced on the 2nd of May, and Coforge will be acquiring around 54% stake in Cigniti's share capital. The reason why they are doing this acquisition is to scale up retail, technology and healthcare segment, where, areas like Southwest, Midwest and Western US, these are the primary markets for Cigniti, which Coforge does not have. So that is what is the major purpose, because 48% of Coforge's global revenues come in from North America, and their presence has largely been on the East Coast centric in the US. Overall, they will be addressing AI opportunities, pooling of orders, and they will see a good cash flow management as well. Let's pull up a Cigniti on the screens as well, because that is the stock which has been trading under pressure on the back of this news. There you go, 6.5% downtick coming in on a Cigniti. Overall, Sharmila, how are you looking at this merger? I know it's announced back then in May, but post the approvals that have come in today in terms of the swap, Cigniti has been down and about in trade. How would you look at it?
Well, actually, it's good news. Everything that you said, A, how Coforge is performing, B, what Cigniti brings to the table. So they are going to be looking at areas where they need to build strength. So I think all that is good news. I think, yes, when these kind of mergers happen, there is always that little what swap ratio are you getting, what price, etc. Those things sort of need to they sort of average out over 2-3 months. So I think from that perspective, maybe you need to give Cigniti some time, maybe before you think of buying it. Largely because valuations look expensive and this overhang is there. So give that some time. Same thing for Coforge. I think the stock is on a great run. But again, over there, valuations look expensive. But as far as this news goes, I think that this makes great sense for Coforge to be doing this. And I think that both parties will benefit in the long run.
Okay, so another company which is, in fact, one of the major announcements that we've seen coming is JSW Energy. On the same theme, it has marked its largest acquisition since its inception. Mika has more details on the same. Mika, we are looking at a considerable big size of acquisition. What does this mean for the company?
Thank you for that. So the deal does mark JSW Energy's largest acquisition. It's going to acquire 2 companies at an enterprise value of 12,468 crores, and the deal will actually increase the company's locked-in capacity by 23% to around 25 gigawatts versus 20 gigawatts before. And this is well ahead of its targets, because the company did aim to hit 20 gigawatts capacity by 2030 itself. Now they will acquire 100% interest in 2 entities. One is O2 Power Midco Holdings and its subsidiaries, and the second is O2 Energy. And the main, it's expected to be completed, the proposed acquisition by 26th May of 2025. Major approvals from the CCI and the lenders are still required. Now, when you talk about what it will be acquiring, the assets, well, it includes a 4.7 gigawatt renewable energy platform from O2 Power, out of which 2.2 gigawatt of capacity will be operational by June 2025, and the remainder, which is under construction or in the pipeline, will also be commissioned by June 2027. The average portfolio tariff is 3.37 rupees per kilowatt hours, and the remaining asset life is 23 years, so it's a high quality asset. When you talk about the benefits, well, it's first at an attractive valuation of 6.9 times the EV to EBITDA ratio. It also increases its locked-in capacity and also increases its commercial and industrial portfolio to 3.7 gigawatts. It helps strengthen the company's presence because the assets are spread across 7 rich states, out of which JSW Energy already has presence in 5 states, so it increases the scope of synergies of the operation and maintenance and the in-house EPC services that the company provides, and all the assets have an expected equity internal rate of return of over 17%.
Well, thanks for that, Mika. In fact, we also spoke to the management on the funding plans for these acquisitions and the debt levels. Do listen into that slice of conversation as well.
The deal is to be consumed in 5 months timeline, which is there from the signing of the SPA, but we are quite confident that it will happen earlier. So numbers are going to be dynamic. It's specific for 12,468 crore. The value is that because the part of net working capital, which is a dynamic number, when we close, we will be ready with the exact numbers. But yes, we have to remember in terms of funding that what we have, you may recall that in April 24, we raised a QIP of 5,000 crore, successful raise of funds we did through that route. And in September closing, H1 closing, we have reported a free cash of 5,700 crores. So we are very, very comfortable with it will be a mix of internal accruals, plus if in case the debt is to be raised, but exact numbers will be coming. In terms of ratio, if you are asking debt to EBITDA ratios, what we have declared of 4.1 end of H1, and if we remove the construction work in progress, which will give us the returns once the capacity gets commissioned, it was a very comfortable number of 2.2. Even if we talk of net debt to EBITDA, including CWIP, the industry average is 5.5 to 6, wherein the rating agencies are comfortable. We were at 4.1 in September. So all these gives us a lot of cushion and headroom to accelerate our growth, and our strong balance sheet strongly supports that.
Well, that was the management of JSW Energy. In fact, let's pull the stock price as well. We are seeing about 3 to 4% of gains in trade today after the announced this acquisition. Sharmila, coming back to you on this acquisition, 12,000 crore plus of an acquisition. Attractive valuations is what Mihika spoke of, and an increase in capacity by around 23%. What does this mean for you with this acquisition taking place?
So the interesting thing in the sector is that what we've been really seeing over this last year or so is that everybody is now positioning themselves to be in green and renewable space, and that's a sort of a concept that is taking sort of which market is liking, and we are seeing a whole host of stocks that are either announced or are getting into green energy or renewable products. And JSW Energy has been right there. They've been making the right noises for quite some time now, and even these acquisitions that we're hearing of point in that direction. So I'm extremely positive on this development. Here again, I think at the moment valuations look a little expensive. So I think you need to give the stock maybe 8-9 months, see how the next couple of quarters are going, and then look to make a fresh investment. But overall, I'm extremely positive on this development as well as this stock.
Right, positive in terms of JSW Energy. But moving on to our next theme is all about fundraisers. 2 stocks that we're talking about is Deep Industries as well as Shakti Pumps. Both the core stocks are under pressure, but it's interesting to see how Deep Industries has almost doubled in the last 1 year if you see a 1-year chart. And in terms of where Shakti Pumps go, the stock has given returns of nearly over 6 times in the last 1 year. So strong performance there. Fundraisers, what they're considering. Now, the reason of the fundraise is not really known. Jan 7th is when Shakti Pumps will be raising funds. Whereas if you see in terms of Deep Industries, they've got the approval, a proposal to raise almost around 350 odd crores. Sharmila, both these stocks, news is the fundraise. Performance has been spectacular, 2 unrelated industries. But what is your view?
very difficult, to take a view just based, because as you said, we are not sure what they're going to do with the fundraise. I think in terms of numbers as well as valuations, out of the two, to my mind, Shakti Pump looks better at the moment. But having said that, we also need to know what they're going to, because the sector that Deep Industries is in, we need to know what they're going to use this fundraise for, because that could be interesting and put a whole new spin on the stock. So as of now, I think I'd stay neutral till I have a little bit more to go on.
Okay, well, that is where the Shakti Pumps is considered. But another stock in focus is Utkarsh Small Finance Bank, where it is expected to sell over NPS worth around 355 crore. The sale is to be conducted through an auction, and the reserve price for the auction is set at around 52 crores. Bank will be accepting cash and security receipts from potential ARCs, which is Asset Reconstruction Company. What's the impact for this? Let's understand that also. 52 crore of proceeds on sales is considered a positive, though a small amount is what they're saying. 355 crore. The size of this sale that we are looking at makes up for around 49% of bank's GNPA, and they've already provisioned for around 355 crore of net provisioning assets. So Sharmila, coming back to you, a small play in what the Utkarsh Small Finance Bank is doing. In fact, let's pull the stock price of this one also, how it is faring in trade today. What is your view in terms of this announcement?
Let's just first talk of the sector. I think small finance banks, they've sort of over this last quarter or maybe 6 months, we've seen them go through various pains because of everything that is happening in the sector and how it is coming to reflecting on their books, etc. So I think next year will be a lot of it will be sort of the focus for these companies and banks will be to sort of get their house in order and restructure their books and really take it from there. And then if we see a growth in credit, etc., and how that gets reflected, how they're best able to capture it, because it's a very interesting space. If you look at the various names in it, and they're all sort of in their own niche, and they are all catering to different set of clients. And overall, if you ask me, as a space, I'm positive on it. But of course, the last 6 months, as I said, they've not been good for the space. That said, I think this is a good development in the right direction for Utkarsh Small Finance. So let's see how things pan out for them in the new year. So as I said, a sector that I like, but we need to see some real recovery on the ground before we really take a further call.
Well, that's the view for Utkarsh Small Finance Bank. But with that, it's time to slip into a short break. Let's stay tuned for other updates also coming on the other side.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV.
You're watching Hot Money. Our next theme in focus today is a Vodafone idea. Let's quickly pull up that stock on the screens and see what the counter is doing in trade. There you go. 4% is the kind of gains that are coming in, but it has cooled in from the day's highest levels. If you can quickly have a 6-month or a 1-year chart of Vodafone as well, because it's been an absolute topsy-turvy ride for the counter. There you go. You can see the kind of downtick that we've seen. 51%, is the kind of cuts that we've seen from a high of almost 18 to 19. The stock is now trading at levels of around 7 rupees. But now the company has actually gone ahead and welcomed government's move, and this is to waive off the bank guarantee requirement, admitting that the move will benefit the company. Mika joins us with more details as to what has happened, how will it impact the company positively, and what still remains as an overhang. Mika, over to you.
Thank you. So the government has gotten a relief on the spectrum bank guarantee because the Department of Communications has waived off this requirement for the telecom operators. Now, just to give you some context, bank guarantees were required for spectrum auctions before 2021, which is when the reform package came in. So now the bank guarantees have been waived off for 2012, 14, 15, 16 and 2021 spectrum auctions. Now, in terms of Vodafone Idea, they were previously obliged 24,800 crores in bank guarantees, and now this will not be required. However, it is key to be noted that not all is waived off. A one-time partial bank guarantee for the 2015 auction still remains. The company is in discussions to finalize the amount of this partial bank guarantee for shortfall. But nonetheless, the move does benefit Vodafone Idea. It has a positive impact on the balance sheet because the waiver frees up financial resources of the tune of 24,800 crores, which were previously obliged for the bank guarantees. So now the company can now utilize these unlocked funds for network expansion as well as 4G and 5G deployment.
Thanks, Mika, for getting us the details. The stock is up a little over 4%. Sharmila, how are you looking at a Vodafone? Do you think this could be a turnaround story from here?
Difficult to say because, I think that while telecom is a sector that I like and I do see tremendous growth for the players within that, I think the difficulty is that this is a sector that requires you to have make large investments because you need to upgrade your, we've gone from 3G, 4G, 5G. So you're continuously upgrading your system because that is the only way that your customers will stay with you. And if you look at the data, if there is one company that has consistently lost on their customers, it has been Vodafone. So, you're now getting into a tricky position because you are losing subscribers and at the same time, you are you have a crunch because you have debt to pay and how do you expand your network? So I don't think they're completely out of that situation yet. This is definitely a big relief to them. But very honestly, I think for the longest time, Bharti Airtel has been my preferred play within telecom, and that continues to be so.
Okay, well, that was the view on Vodafone India. But shifting focus, now we have a management in focus. Ramki Infra has won a 215 crore rupee worth of contract. This is for the Hyderabad sewage treatment plant. We have NS Rao, the group CFO, joining us. Hello and welcome to the show, Mr. Rao. My first question to you is about the order win. If you can give us more details on in terms of execution, what does this mean for the company and more?
Hi, good morning to you. Thanks for me to be on this forum. Coming back to the recent award that we have won is about 21 STPs for entire maintenance as well as also the diversion. These are the projects which have been implemented by the state government from 2003 onwards till about a couple of years ago. The reason for we being in this space is that for the last 20 years, we are the specialists in this game and also a kind of a pioneers, having established India's largest facilities both under the USAB, which is called the upward slow anchorage of the sledge up moving anaerobic, the blanket technology, and also recently we have established the India's largest 320 MLD STP, which uses the sequential batch reactor. So with this technology background and also the deep experience, these are the 21 projects which have been awarded to us. And I think we shouldn't have any problem as far as executing these projects in a timely fashion. So that's the take as far as on the current order is concerned. Coming back to your question on the what is that you would look into based on the current order book position. If you look into the last 9 months, we have already got about 17 projects or 630 crores. And we are today in fray for about 14,000 crore worth of projects where the tenders are being called for, and in about 6,000 crores worth of the projects, the tenders are yet to be opened. So that is a kind of the order book position, configuration, and the flavor. So that's it.
Right. Mr. Rao, this is Hiral on this side. So currently, as per the September release, 8,505 odd crores is where the order book stands. Post that, the additions that have happened, at what is your estimation, at what order book are you expected to close FY25? And in terms of execution, what's the timeline for this order book?
The post-September, we have additionally another 250 crores of the order book that has been received and closed. And currently we are, the status where we are in is at about 2,400 crores of the projects where the tenders have to be opened. I expect at least 50% of it should be closed before the end of the March. And there is another 14,000 crores worth of the projects where the tenders are being worked out. So we expect the current order position of about 8,100 crores to be closed around 10,000 crores by the end of this year. And out of whatever the 14,000 crores outcome, even if I take about 25,000 plus 25% of it, it should be another 3,000 crores. So the order book position would be substantially robust as we anticipate as of now.
So substantial increase in the order book that we are looking at. You mentioned about a 14,000 crore worth of an opportunity that you're looking at. Want to understand from you, what is the success ratio you usually like for Ramki Infra? Which are the key projects in focus that you currently wish to bid for? Which segments? If you can give us more perspective on that as well.
Well, if you look into the projects where we have already been awarded the configuration, if you took the water treatment and the wastewater and wastewater treatment and also the STPs. If you have to look into the potential of this, thanks to the government initiative, and if you look at the last budgetary allocation, only on one segment of this entire WWW, that is the wastewater, the last segment, you have about 4,000 the urban civic bodies, and out of which 8 are about the categories of the metropolitan. And the STPs, if we have to get even 100, have been the promulgated to be taken on a priority. The scope seems to be quite substantive as far as that one segment is concerned. We are also into the buildings where we have got the group projects coming in. That's almost about 30% of my revenue, which is not going to go down in any way, and which will only be an accentuation. It will may increase about 10 to 15%. Then recently we have forayed into, though previously we were there, and we have got into the power related the projects also. So we are into basically urban solutions or urban infra solution kind of a thing where the most critical water treatment and wastewater treatment to an extent of zero liquid discharge. That's what we are aiming at. There is one more segment which is much bigger. This is the industrial infra solutions where the industrial parks are provided with all the outside battery limits and also the common effluent treatment plant. For the knowledge, we have established already India's largest CETP at Visakhapatnam. It's a pharma city. And it is the largest, having about 104 who of the pharma industry having established their facilities there. And India has about 12 industrial corridors, and there are about 36 to 40 industrial zones where you need to have such facilities to happen. So we are quite eager and also positively looking forward for this industrial infra solutions also. So this gamut will cover the entire hardware part of it and also engineering solutions, the software part of it. That's where we are in today.
So Mr. Rao, just to understand, 3 businesses that you're actually focusing on is EPC, development, that is the developer part of it, and thirdly is ops and maintenance, right? Which are great opportunities for your business. What is the revenue contribution that you're expecting from these 3 business heads in the next 2 to 3 years? How will it change from now, and how will it aid margins?
Continue to be there on the roughly between the EPC and the development is about 50% of my revenues of the order position, and another 50% comes from my O&M. O&M spans over 10 to 15 years, so it is a steady and a consistent and also quality income. Coming back to the EPC and development, this is another 48 to 49% of our revenues which would come. And today's order book position can state me easily for another 2.5 years. And with the order book position, apart from that, what we are going to bid and we are going to have, perhaps I don't think that we would have any kind of a concern for subsequent another 2 to 3 years. So that is the kind of the potential and also the space where we are in today.
Okay, well, that's as far as the mix is concerned. Now, coming to the performance that you've had so far in the first half, you've seen a revenue downtick of around 3.7% and margins at 22%. This is as compared to the 29% of margins that we had seen in the last half of financial year 2024. Want to understand from you in terms of where FY25 and 26 is concerned, what is the kind of projection, the kind of growth that you expect in terms of where the revenue is, where the margins are, if you can give us more clarity on that.
As far as my first 2 quarters are concerned, the second quarter has been afflicted by a loss of about 21 days in construction activity because of unusual and heavy torrential rains. That is the reason for the slight downward, the tick there. But as far as the profitability is concerned, we expect to maintain between 20 to 25%. That should be in place. Coming back to the next year, we expect next year to be in line with our progress for the last 3 years, that is 25-26. And I mean, looking at the current order book position that we have today, even if the kind of the 1/4 or 1/3 of it is coming into our fold, or even 20-25%, the growth rate would be either at the same level, whatever the CAGR that we have achieved, or even it may be a little better than what we are today. That's what our anticipation.
Right. So growth at similar levels or better, that is what is anticipated. Thank you, Mr. Rao, so much for joining us on the show and sharing the view. So that's the management of Ramki Infra. Let's just quickly pull up the chart on the screens from a long-term perspective. 1 month, again, pretty flat is what the stock has seen in terms of movement. But if you've seen the last 12 months, the stock has seen wealth erosion to the tune of almost around 22%. Will all of this lead up to an up move on the stock is what we need to wait and watch and see. But another stock on the back of an order win is IL&FS Engineering. They've also got a project worth around 300 odd crores from Seagull India. Let's pull up that stock, I beg your pardon, on the screens and see what the stock. There you go, locked in upper circuit. In fact, should we go across to, do we have Sharmila still with us? Yeah, Sharmila, overall, these two stocks on the back of an order win, you already heard the management of Ramki. The stock has underperformed. What would you advise?
Well, I think the last comment that you made on Ramki, I think that will be interesting to see, because while the order wins sound good, the corrosion that we've seen in the stock price has been a result of the fact that, you discussed it with the management as well. Because you have seen their numbers take a bit of a hit. You've seen their margins come down, you've seen profitability come down. So first half of FY25 has not been the best for them. So you need to see how that recovery happens from there in terms of, definitely in terms of margins and profitability first before we talk of anything else. And at this price, most of the positives seem factored in. So I think we need to wait for a couple of quarters and see how their numbers are panning out for the next year, because even there, I think, they said that same rate of growth. So you need to see whether margins are recovering, profit is recovering, etc. before you take a further call. IL&FS Engineering, I think, is a better place, at least in terms of valuation, but I don't know what these order wins are for.
That's the overall theme on the order wins, two companies in focus and what the outlook is for these companies that we are seeing. But moving on to the brokerages of the day, Morgan Stanley has released a note on Zinka Logistics, and this is with an they've initiated an underweight trading on this, and this is with a target price of 450 that we are looking at, which implies around a 16% of a downside. A couple of interesting points that they've made in their report is, firstly, the share price, if we look at, since the November 24 listing, it's seen about 105% of growth. So strong rally already seen in this stock, which now makes the risk to reward ratio unattractive as per what Morgan Stanley is pointing out. Along with this, if we look at the tolling business, which is their core revenue business vertical as well, they already have a high market share here. But going forward in the future, they see a limited room in terms of where the total addressable market is, and thus the growth assumptions for this are on the limited upside is what they're expecting. External risk factors also revolves around the merchant discount rate, wherein visibility remains unclear on what the growth and the margin assumptions could be in the medium term perspective. Where the new services are concerned, it's still in the early monetization phases, so the growth trajectory of this is yet to be proven, so another factor that we should be watching out for. But what has remained good for the company as well is the company has built a niche and competitive space in the large fragmented market where it currently operates, and we were speaking about the core business vertical. They expect to deliver a potential 24% of a growth between FY25 to 27. But considering the above ratios that we spoke about, which is the kind of rally that the stock has had, the valuations, limited room for upside in terms of where growth is, that is why Morgan Stanley has a bearish view on the stock, and thus we are seeing a 16% of a downside. But Sharmila, coming to you on the first big brokerage call of the day, what is your view on a Zinka Logistics, a recent listing and has seen a tremendous move after this? Do you think the valuations continue to favor the stock?
No, not really. And I think that, with a whole host of IPOs, you need to be a little careful, because I think that if you have not got shares in the IPO, or if, in the sort of earlier phase of the stock, then I think, you do tend to hit some sort of hurdle 4 or 5 months down into trading. So you need to give them then that 5-6 months, see a couple of quarter numbers, see how the management interacts, etc. What are their plans going ahead before you take a further call. So I would say it's a void for me.
Right, so that's with regards to Zinka Logistics. The other one that is in focus is Adani Enterprises. That's an interesting one to watch out for, because it seems that the stock is staging for to become the top nifty performer in 2025. In fact, Ventura Securities has set a bullish target of 3,801, and they are seeing a potential upside of nearly 57 to 58% over the next 24 months. Overall, if you see in terms of the bull case scenario, the target price has been raised to 5,748, and that's almost a 2.3 or 2.4 times kind of returns in the next 24 months as well. They have assumed a revenue of almost 1.66 lakh crores over FY24 to 27 and an EBITDA margin of 20%. And this is at an EV enterprise value to EBITDA of almost 23.4 times. Overall, what they are saying is that it has become India's largest business incubators and has a diversified business model that has fostered key sectoral players like Adani Ports, Adani Green and Adani Wilmar. In fact, the consolidated net profit for the company actually in the last quarter rose nearly 500% as well. Overall, if you see in terms of Adani Enterprises, how are you looking at it, Sharmila? Because clearly the note gives you a major upside coming in here, and the diversification into H2, that's the ecosystem that they're looking at, specifically with airports, solar, two businesses that Ventura is focusing on as well, and the wind turbine generator business. How are you looking at the counter? What would your view be?
Well, I think the difficulty has been that if you look at the numbers and the kind of businesses that the company is in, all that I think pans out. But we've had little concerns over the news flow. But that said, I think the stock is now at fairly reasonable valuation.
And apart from that, in fact, all the Adani group of companies actually are advancing in trade today, from a ACC to a Ambuja to a Adani Green, all of them, Adani Ports, all of them that are trading in the positive, Anushi.
Absolutely. So that is where the Adani group is concerned. But moving on to the next theme is about the fatal accidents which have taken place. We have two counters in focus here. One is Alkyl Amines. There was an explosion, massive explosion at the Kurukum plant, wherein the residue tank had captured at the Kurukum derivative plant on the December 28th, leading to severe burns to the attending officer, who later succumbed to these injuries. Operational impact, where that is concerned, there would be a temporary disruption expected, but extent of damage and production is still clearly under assessment. While on the insurance side, they say that the assets are adequately insured, insurance claims are being filed for the damage. So that is where Alkyl Amines said. But another counter in focus is also Gujarat Fluorochemicals. In fact, if you look at the where Gujarat Fluorochemicals is, it's trading down in today's session. About 4% of a downtick is what we are seeing. This is also lower after the incident of leak at the H plant, which led to 4 deaths due to the disrupting the operations on a temporary basis as well. This happened at the CMS-1 plant, and this has led to the temporary disruptions in terms of where the operations are concerned. Sharmila, coming to you on both of these counters, Alkyl Amines and Gujarat Fluorochemicals, while there might be a temporary disruption we'll see in terms of where the operations are, what is your assessment of the temporary, the near-term picture and the long-term picture for both of these stocks?
So coming from a purely valuation perspective, I think between the two, Alkyl Amines looks better placed. Because, as you said, I think that this incident, however unfortunate, is going to be a temporary glitch in terms of the company operation. So I'm looking at the stocks purely from the way their numbers have been and what valuations they're trading at. And to my mind, Alkyl Amines looks better than the two.
Alkyl Amines, that one looks better as compared to the other one, and there has been an impact specifically from a production perspective. So that's something that we need to wait and watch and see once the company reports their next quarter numbers as well. But moving on, let's shift focus to Apollo Microsystem. Let's pull up the stock. In fact, 8% is the kind of uptick that we'd seen on the back of an order win. Now the stock is up almost 11 to 12% in trade. They've actually been the lowest bidder for a small order worth around 21 to 22 odd crores from BEL. And they secured fresh orders worth 130 crores, which are yet to be executed. In terms of their first half performance, the profits are up almost 200%. Revenues have seen a smart up move. Margins have remained absolutely stable as well. In fact, we did speak to the management today to understand what's in store going ahead. Director Krishna Sai Kumar, who expects the company to consistently grow at 50% over the next 3 years. Let's listen into what he had to say.
Instead of giving a number of years, I would
broadly.
Right. Yeah, I would try to put it in a different way. We have participation of along with the DRDO in almost several, all the indigenous missile programs. We have participation. 60% of the technologies which are part of these programs, we have a participation. So many of these programs are actually entering into production phase in next few months, in next few years down the line. Apart from that, our own, fully, OEM rockets, and guided, unguided, we are developing, which will also create it. So this 50% growth will continue to be there for next 3 years. We will be growing like this consistently. Next year, if we are clocking 100%, kind of a doubling the revenues, then I can say, still will continue to grow from there. Another 45 to 50% will continue to grow.
Right, so that's the management of Apollo Micro. Sharmila, a quick one in terms of Apollo Micro. How are you looking at it? Strong moves?
Well, I've never honestly studied the stock, but just looking at the valuations as well as the growth they've shown, this stock definitely seems poised for bigger things.
Right. So probably a stock that we should be watching out for in the last 1 month as well. 9 to 10% is the kind of up move that we've seen. But clearly, let's just look at the markets right now as we speak. We are at 23,800. It's interesting how we've given up gains from the day's highest levels and now turned into the red. So pretty much volatile right now. The declines are around 29 versus 21 advances on Nifty 50. Adani Enterprises still continues to be the top gainer. Cipla, Sun Pharma and Apollo Hospitals have come up in the green right now as we speak. But what is putting pressure is Wipro, Hindalco, Hero Moto, Bajaj Auto, as well as a BEL. These are the ones which are trading under pressure. Let's just quickly pull up the sectoral heat map and see what is that trend that has taken a change in terms of the markets right now. Clearly, you have Auto Media, which is the top loser. Auto is under pressure as we speak. IT media continues the downward trend as well. And in terms of broader markets, let's just pull up the mid cap and the small cap index and see what's happening on that front. There you go. Flattish moves. Again, the mid cap index has given up gains and the small cap index, which has trading in the negative. So clearly a lot of stock specific action, but the volatility continues to remain high. How we end in today's session is going to be interesting to watch out for. But completely out of time. A wrap on this edition of Hot Money. A thank you from Anushi, the team that put the show together, and myself. Lots more lineup on the other side. Please stay tuned to NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The news.
Benchmarks come off the high point of the day to trade flat. Nifty hovers near 23,800. Sensex near 78,706. Pharma tops the sectoral winners, followed by banks, while media and auto lose the most. 3 new Dalal Street debuts today. Carraro India lists with discounts, while Synor's Pharmaceuticals sees a strong listing. Reddit Hospitality lists with a premium of 11%. Adani Enterprises emerges at the top Nifty gainer. Shares gained after a Ventura note indicating a 57% upside. JSW Energy shares trade with gains on the back of new acquisition. Deal marks the company's largest acquisition since inception. India hopes to qualify for the World Test Championship dim as the men in blue lose against Australia in the 4th Test match. Australia likely to face South Africa in the finals. Hello and welcome. You're watching Market IQ. My name is Nika Barve, and up first, let's just take a quick look at how markets are faring right now. Well, the Nifty 50 is trading with a negative bias, down about 0.15% in trade today. We have 29 declines on the benchmark against 20 advances. Some of the stocks that are dragging the benchmark down, we have Hindalco down about 1.7%. Weakness in Wipro, Hero Motor, Bajaj Auto, quite a bit of auto stocks since the index is trading lower. Some of the counters that are doing well, however, is Adani Enterprises, the top gainer, up about 6%. No other counter making moves like this one today. Followed by Shriram Finance and Cipla that are seeing gains of almost 1%. When you look at the broader markets, well, the Nifty Mid Cap 150 is trading flat, while the Nifty Small Cap 250 is the underperformer, down about 0.4%. We have 162 declines on this index. When you talk about some of the counters that aren't doing so well, you have Triveni Engineering seeing cuts about 6.8%. There's weakness in Intellect Design, down about 5%. Weakness in KFin Technologies, as well as Ratnamani, which is down about 4%. Let's just take a look at the sectoral gainers and losers. You have Nifty Media and the Nifty Auto Pack that are your top losers right now, followed by Nifty Energy. Only 3 major indices in the green. You have Pharma, FMCG and Bank. I just want to pull up the Nifty Pharma, up about 0.7% right now. When you look at some of the gainers, we have a Biocon, which is up 4%. We have an Abbott and a Lupin and an Alchem Lab seeing gains of 1.5 to 2.5% in trade today. even something like, if we just pull up the Nifty Auto and the constituents on that index, we have Nifty Auto down by 0.5%. We have almost all of the constituents on the Nifty Auto seeing cuts except Eicher Motor, which has some strength, Bharat Forge, TVS Motors, Hero MotoCorp, all of them trading in the red. But let's also get some market opinion on that note. We spoke to Parag Thakkar of Fort Capital earlier today and asked him about his top sectors. Do listen into that conversation.
One good thing is that all PSU banks had large corporate exposures. That is all cleaned out.
Valuations are attractive.
So valuations are attractive. So you will not see that 30, 40% growth in earnings because all those provisioning items which were there have now come into PAT. But you will see a non-cyclical 10 to 12% earning growth without any large problems in the credit cost side. So basically, we have some names in pharma stocks like Granules and Dr. Reddy's and all. But what I feel is that, see, when you see a real economy which is a little bit slow, when you see a rupee which is depreciating, there is a tendency by hedge funds or traders to move out of the domestic cyclicals and to safer names. In safer names, when you consider it is pharma, FMCG and IT, right? And telecom, of course, telecom largely two players. So what I'm saying is that, when that happens, in FMCG, you are seeing very slow growth. Many companies are giving of course, with ITC having this hotel demerger, there's a traction there. But generally, we have seen that FMCG companies have given very low. Godrej Consumer Business Update came, and so there is a natural movement towards pharma.
With that, let's move on to the top gainer on the Nifty 50 today, and that is Adani Enterprises. It's rising in trade up about 6% if you can just pull up the chart. And this is on the back of Ventura Securities, which released an interesting note on the company and said that they're recommending a buy with almost 60% of an upside. Let's go across to Anushi for more on this.
Big upside that we're looking in terms of what Ventura has recommended for Adani Enterprises. They continue to recommend a buy rating, and this is with a target price of 3,801, which is a 58% of an upside over the next 24 months. That is the time horizon that they have for this company. Now, a lot of factors to consider as to why they are bullish on the stock. First, it is the largest business incubator with high DNA for growth. This is what Ventura has stated as its opening for the company's note. They project